And welcome to the show. The next one is coming from Uma, who's from Bengaluru. Her question is on Vedanta, holding almost 200 shares, bought at 286, asking what she should do with this counter in the short to near term. Swati, very good morning to you as well. What would be your recommendation for Vedanta now?
Good morning to you and to all the panelists. The review is definitely positive because the counter is trading important moving averages, and just as of now, it is just consolidating within the range of 260 to 280 levels. I believe once the stock manages to give the breakout of 280 levels, which is also the resistance provided by the 100 DMA, so once it's clear out that levels, then definitely a more positive move likely to be witnessed, which will take a stock towards to 300 rupees. So I will suggest at the current levels, you can definitely hold on the long position, place a stop loss of 260, and carry your long positions for immediate target of 300 rupees on the upside.
Got it. The next one coming through, and this one's on Scient. Our viewer Venkat, who's from Hyderabad, holding shares at almost 1264 odd rupees. So he's currently sitting on a loss. The stock is, finally starting to see some moves now, about 900 rupees, but he's still in the loss. Avinash, what would you recommend him to do? Because we're starting to see some moves on IT as well. Maybe the global, what we're seeing globally as well, rotation back into these software-led stocks. Would you recommend him to average down, or maybe he should just continue to hold? What's your opinion?
No, I think Puneet, if he has got a 12 to 18 month time frame, I think he should definitely average, because what is happening in the IT sector is very clearly a lot of Indian IT companies are now either buying out AI startups, or they are planning a joint venture with these companies. So I think Scient is also definitely well managed. It's got a very strong business vertical in segments like aerospace, railways, and typically I think if you see the numbers have been pretty steady. So my sense is, I think if the investor can hold on for the next 12 to 18 months, he could average a little and stay invested here rather than booking a loss at this point of time.
Right. The next query is on PFC and Bharat Electronics. Jerry from Pune wants to know whether is it the right time to invest in both these counters for the next 2 years. Avinash, your view on this?
Yeah, I think we are more positive, Somit, on Bharat Electronics. I think the company's stock price corrected, after the tepid Q1 number, but the management commentary was very strong. They have clearly indicated that execution will get ramped up in the quarter 2, quarter 3. And they are sitting on a very large order book. The company is completely debt free, and avionics and electronics, BEL is considered to be a market leader. So my sense is, if the investor can hold on for the next 2 years, Bharat Electronics at the current level, or maybe you could buy it in a staggered manner. Which was the other stock you mentioned?
PFC.
No, I think PFC, I think one can hold on, wait for some time, because I believe PFC and REC, there has been some merger announced. I think let the stock stabilize and settle down. I think maybe PFC can be put on hold for the time being, but definitely I think maybe, if it corrects by say 5-6%, then one could gradually accumulate, but that too with a 18 to 24 month view.
Correct. We also had a Morgan Stanley note on PFC, largely being bearish that they are losing on to some market share, especially in that power space, to other banks. So that could be a story that's something that you have to watch out for, how that plays out. But the next question is from E. Venkatraman from Bengaluru. So he's holding on to HDFC Bank as well as HDB Financial. Now, both those counters you've had a lot of queries on. He wants to know if he wants to exit one and continue to just hold either of them. Avinash, is this an easier choice than none? We've seen some good earnings come through from HDB Financial, but what would your advice be? Which is the bigger play that he should hold on to on his portfolio?
I think both these stocks have disappointed investors, Puneet, and my sense is that unless the investor has got a 2 to 3 year kind of time frame, a reasonable alpha from these stocks looks very difficult. But nevertheless, I think HDFC Bank has come to a very attractive level, and I think the bank is making all-round efforts to ensure that it gets back on track. So my sense is, if we can hold on for the next 2 to 3 years, HDFC Bank, which is the parent, can definitely be held on. But again, with a long-term perspective, in the short term, there are not going to be many earnings triggers which could, make the stock get into momentum in the short term.
Right. The next one is on Transformers and Rectifiers of India Limited. Mahesh from Hyderabad is holding few shares, bought at a price of 355. He's currently sitting on a loss. What should he do from short to medium term? Swati, any view on Transformers and Rectifiers?
View is little bit cautious as of now because the counter is trading in a low bottom, low top formation. So I believe that the selling pressure is likely to be seen in the near term futures. A positive move can be witnessed only if the stock manages to give the breakout of 315 levels, which is acting as a crucial resistance levels. If it manages to those levels, then only we can witness some buying position. But at the current level, I will suggest to hold on. Sell on rise strategy should be implemented. 290 can be kept as a stop loss. Any rise towards to 315, 320 can be utilized to exit the loss position.
Got it. The other one also, Swati, sticking with you on Premier Explosives. A viewer bought these shares at 792. Let's pull up that counter now. Trading at around 665. Swati wants to know what he should do with the next 2 to 3 months. So very short term. We've seen a corporate action here play through as well. Any view on the counter?
See, the long-term view is definitely positive because already we have seen a very sharp rally from almost 350 to 850 levels, and from there onwards we are witnessing a profit booking which cannot be denied after such kind of a rally. As of now, the stock is stuck got between the 50 and the 100 DMA. I believe we are likely to witness some sort of a consolidation phase in this particular stock. But for longer-term horizon, my view is positive. We might witness some sort of a depth towards 2630 levels, which is the support provided by the 100 DMA. So probably a short downfall can be witnessed, but definitely there will be a rebound rally which can be witnessed, which will take a stock back towards to 750 to 770 levels. So I will suggest to hold on for some more period of time. Any uprise stick towards to 750 levels, you can book your profits.
The next query is on Jio Finance. Bharat from Porbandar, Gujarat is holding 543 shares, bought at a price of 258. He wants to know whether should he continue to hold on to this counter. Avinash, your view on Jio Finance?
No, I think Swamit, in case of Geo Finance, my sense is Q1 numbers were pretty decent. I think unless the investor has got at least a 2-year plus kind of horizon, a large risk reward is not likely. In the short term, the stock may remain in a very close range. But my sense is longer term, a good reasonable risk reward can be expected. So continue to hold, but I think keep a time frame of at least 18 to 24 months.
Got it. Well, the next question coming through, it's on Godrej Industries. Our viewer Ravi is holding these shares at almost 1240 odd. So he's currently sitting on a slight loss, Avinash. He wants to know if he should still continue to hold. Does get access to a lot of other companies, Avinash, but is that the way to hold stakes in multiple companies? Would that be your recommendation?
No, I think Puneet, this is a holding company, as you rightly mentioned. They have stakes in Godrej Consumer, as well as one of the other companies, that is Godrej Agrovet. But I think clearly in terms of the risk reward, these kind of holding companies normally trade at a discount. So I think unless the investor has a very long term horizon and wants to actually get both the dividend as well as the capital appreciation part, he needs to stay invested for the next 2 years. So unless he's got a long term horizon, he should hold. But otherwise, if he's got a short term horizon, it's better to exit. He could probably look at some of the good PSU stocks or maybe the banking stocks where I think the risk reward could be better. Something like an ICICI Bank or maybe a Canara Bank could definitely be a switch if he decides to do so.
The next query is on Marksans Pharma. It's for you, Swati. Prashant is holding 150 shares, bought at a price of 241. He wants to add more. Should he do that based on charts?
Based on the charts, I will suggest to wait for some more time. No wonder the view is positive, the trend is still positive, and on the weekly charts, we have witnessed a cup and handle formations breakout. But from the last 2 to 3 weeks, we are continuously seeing a very strong pullback rally from almost 240 to 340 levels, 100 points momentums. Any dips towards to 270, 260 levels can be utilized to build up the average positions or the fresh long positions. So wait for some more time because the counter has shown a negative crossovers from the overbought zone. So we might witness some sort of a profit booking, which will take us counter towards to 250 to 270 levels. So wait for some more time. Then on any dips towards to 270 to 50 levels can be utilized to build up the long positions.
Got it. Well, let's go across to Bengaluru now. Ganesh is dialing in for a stock-related query. Ganesh, very good morning. Welcome to the show. What's your query? Hi, Ganesh. Can you hear me?
Hello?
Yeah, hi, Ganesh. I can hear you. Go ahead.
Good morning. I have got 70 shares of HR Motor at an average price of 4,500.
Okay.
Can you please tell me how long its prospects for the next 5 years?
For the next 5 years, got it. Well, Ganesh, firstly, many congratulations. Bought it at a very attractive price, Avinash, of 4,500 rupees. What would you recommend Ganesh to do? Should he continue to ride that wave, hold on for the next 5 years?
No, I think, Puneet, very difficult to say what can happen in the next 5 years, but at least for the next 2 years, I think visibility seems to be very strong. Eicher Motors is the manufacturer of commercial vehicles, and they also have the Royal Enfield product, embedded in their product bouquet. So I think, considering both these factors, the CV cycle has started looking up. I think for the next 12 to 18 months, business from the CV business will continue to grow rapidly. And most importantly, Royal Enfield operates in a very niche area. So I would say that continue to hold. If the investor does not require any funding requirement in the short term, I think he should ride the momentum. Our expectation is FY27 should be significantly better compared to FY26. So continue to hold.
Got it. Well, let's now start the rapid fire round in this edition of Ask Profit, and this one will be the only one. You did see the flashes that Nilesh of Kotak will be joining in today at 11 o'clock. So let's start taking those stock related queries. Sanjeev Jain, holding on to Sagility, bought at 48 rupees per share. Avinash wants to hold on for the next 2 years. Should he continue to do so?
Yeah, I think Puneet, he should hold on. The good long-term prospects.
The next query is on MCX. It's for you, Swati. Sabita from Hyderabad is holding few shares. What's the short-term target on this counter?
The view is positive. The short-term target is around 3340 to 3400 levels. You can hold on by maintaining a stop loss of 3200 rupees on the downside.
Also, Swati, on Cupid as well, Nandgopal, who's a regular viewer of the show, holding shares at 250 odd. He wants to know if he should still continue to hold or book out right now.
I would suggest to hold on, but maintain the strict stop loss of 275 rupees on downside, and you can hold on for an immediate target of 300 rupees.
The next query is on data patterns. It's for you, Avinash. Asma from Bangalore has bought 10 shares at a price of 4,896. Should she continue to hold or sell?
I think the investor should hold on for the next 2 years. Very good company, but I think the risk reward will play off over the next 18 to 24 months.
On Sona, BLW is the next counter, Swati. Our viewer holding shares at 656, so currently in good profits. Wants to know the next 3 months time frame. What's the view?
The view is positive on this particular counter. I believe the stock has a potential to reach up to 840 to 850 levels, so you can hold on the longs.
The next query is on Gujarat Energy, which was earlier known as Gujarat Gas. Ajay Kapoor is holding few shares, bought at a price of 275. Avinash, should he continue to hold?
Yeah, I think continue to hold. Gujarat Gas is a very old player in the piping gas space, and I think good long-term prospects. So continue to hold.
Sharath, who's from Bengaluru, is holding on to Bellrise at 200 rupees. Avinash wants to know if it's a good time to accumulate more, or should he actually book out the profit and then come back in?
No, I think these levels the stock is unlikely to correct because Q1 has also been reasonably good, and I think now they are entering into aerospace defense. So continue to hold.
The next query is on Beerless International. It's for you, Avinash. Savita Jadhav from Nashik is holding 100 shares, bought at a price of 264. Should she continue to hold or exit?
No, I think she should continue to hold. Yesterday there was some news, Somit, about some compliance issue related development, and thus the stock corrected sharply. I think management has clarified that nothing negative is on the card, so continue to hold.
Jigar, who's from Mumbai itself, wants to know about JSW Steel, Swati. He's holding shares at 1017, asking if it's a good time to add more now.
No, wait for some more time. I believe the view is definitely positive, but any dips towards to 1250 can be utilized to add up the long position. The immediate target will be 1400.
The next query is on Marico. It's for you, Swati. Asta Sabharwal is holding few shares, bought at a price of 730. Should she sell or hold?
I will suggest to book the profits at the current market price, and if you can add on the fresh longs and dips towards to 810 to 800.
Murthy, who's from Navi Mumbai, wants to know about Tenneco Clean Air. Avinash holding shares at 575. We've seen some steam actually, Avinash, go off on this counter, but is it still a good hold now?
Yeah, I think Puneet, if you look at the next couple of years, the kind of technology and the kind of product monopoly they have, this is definitely a stock to hold on, but I think you need to have a little bit of patience here. Definitely long-term investors will be rewarded. So continue as a hold.
Got it. Well, the stock's been rising since the listing at I think 397 odd, but that was the last question of the rapid fire. Avinash as well as Swati, thanks so much as always for giving us your inputs and views across a whole bunch of stocks and spaces. But viewers, we'll take a very short break. Because you know what, the big town hall with Nilesh of Kotak on the other side, and it'll be an interesting one. You can send in your queries as well for the same. But at this point of time, with the markets in consolidation over the last 2.5 years, what's next will be the key question that we'll be posing in on markets, mutual funds and wealth creation. Stay tuned. A lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Aur trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our capitalism, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में. Coming soon on NDTV Profit.
A world of questions. Ideas that challenge the ordinary, conversations that connect countries and cultures, where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders, the Nepal Dialogue, 27th August, Kathmandu, Nepal. New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. Wow. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform. Digital first. Virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every...
Hello and welcome to the NDTV Town Hall, and we are going to be in conversation with a very special guest, Mr. Nilesh Shah of Kotak AMC, known to call a spade, known to mix cricket with investing, I would say sport with investing, and one of the foremost figures in the Indian mutual fund, finance and investing ecosystem. Nilesh bhai, so good having you. Thank you so much for taking the time out and being with us.
Thank you, Neeraj bhai, for having me here.
No, the pleasure is ours. And the town hall format, Nilesh bhai, is that I'm going to ask you maybe 2 or 3 questions. I want to get the audience out here who is sitting to ask you a few questions as well. There will be some hard-hitting ones, and we'll get some hard-hitting answers from you, I'm sure. So we'll have to duck for cover. But we'll also get in the audience to ask a few questions to you.
Perfect.
Okay, great. So can I start off, Nilesh bhai, by asking you, the common refrain that after 2 years of flattish performance, the Indian markets have done away the excesses and might give good returns when the anti-AI trade starts happening out. We don't quite know when that is happening. We still are at crude levels northwards of $90 a barrel, and we don't know for sure if they will come off. And while the P multiples or the valuations have cooled off, but they are nowhere cheap relative to a lot of other markets. Why should the Indian markets deliver returns from here on?
So, everything will depend upon what is your definition of good return. If you are looking for 30% return, this is not the market where you should invest. A stock can deliver, but not the market. But if you are comfortable with high single-digit to low double-digit return, then this market is good enough to invest. As you correctly mentioned, we are at fair value, not cheap, neither expensive. You also mentioned that our takeoff will happen when other people's anti-AI trade reverses.
Possibly.
And that's the fact of the life. We can't argue against it. India doesn't have AI play as much as other countries have. And hence we'll have to wait for anti-AI trade. But the reason why I will recommend investors to invest in this market, because there are some incredible entrepreneurs who are doing incredible work. Whether it's in deep tech, manufacturing, financial services, these companies are creating value. Now markets can recognize it today, it can recognize it tomorrow, but it will one day surely recognize. So you are investing in this market to back Indian companies and Indian entrepreneurs of incredible quality.
Okay, and you believe there is a case for that right now, as has always been the case. You've always had incredible promoters.
That's always been the case.
Okay, perfect. There is also an added element, Nilesh bhai, of trading coming in, and while it's always been the case, I think the last 3 or 4 years or 5 years, there have been enough instances of the regulator showing that retail investors are making huge losses when it comes to trading in the derivative segment. You've been at the forefront of this as well. Now my question to you is this: does the regulator need to do something from a regulatory or a stricture perspective to curb these losses, or will it be an overreach if there are regulatory measures introduced to curb retail speculation in the derivative market?
We are a democratic country. Regulator does not have power to stop anyone. Regulators' work is like that famous story of old man, a boy and a donkey. When the old man sat on the donkey, the world said, "Arey, you are keeping boy walking." When boy sat, the world said, "Arey, old man is walking." When both of them said, world said, "Oh, donkey is overloaded." And finally, when they started carrying donkey, the world said, "Look who idiots are. They are carrying donkey instead of riding on it." So regulators' job, whatever they do, people will find a fault. And hence, the best thing they can do is to give transparency. A mirror has been put in front of Indian speculators. You are losing money. If I ask any of retail speculator, will you go and fight with Muhammad Ali in boxing? Answer is no. But they are going and fighting with Muhammad Ali every day. The high frequency traders have better connectivity, better algo, more money power, and better computing power. There's no way you can win against them. But still, greed drives rationality out. The regulator is doing their job. They are advising investors, they are cautioning investors, they are bringing transparency in terms of the losses they are making. Now it is up to individual to take the call.
Okay. You know, I had a question on the closing auction session as well, but I know Alex has that question too. So what I'm going to do is I'm going to mix and match, Nilesh bhai. I'm going to get our colleagues out here to ask you the questions, and I'm going to chime in with some questions of my own while that is on. Alex, I want to bring in the CAS question here, but I know you had one. Maybe we start with yours.
So I will actually remind Nilesh bhai that we had spoken, I think, barely a couple of days after the introduction of the CAS. And first of all, thank you so much for joining us, and always a pleasure speaking with you. You had said that it will take a 10 days or a fortnight for things to settle. Based on what you've seen, and in the interim, there's been regulatory action as well, where the regulators come out with a notice against a couple of entities playing in the market. Do you think that it has settled? Do you think more needs to be done to create a little bit of transparency? Do you think it's having a bearing on volumes?
So undoubtedly there will be some impact on volume, partly driven by the fact that regulator is punishing wrongdoers. So that volume will definitely go out of the market. Second, closing auction has settled, but can it be improved further? Answer is undoubtedly yes. The regulator will have to remain vigilante, because there will be always temptation of someone to play around and influence the closing price. As mutual fund, we have given our suggestion to ensure that closing auction session becomes even more meaningful. This is how globally exchanges operate. This is how passive funds ensure that the tracking error is limited. I think water will settle down, but regulator will have to remain vigilante so that no one takes the advantage.
Just for the benefit of our viewers, Nilesh bhai, can you take us through some of the recommendations that the mutual fund industry has given?
So essentially, one recommendation is coming from arbitrage fund point of view. The NAVs there fluctuate wildly and the spreads go up and down because the future prices closes at 340, whereas the cash prices settle at 330 on closing auction. So we are saying that could we have a mechanism whereby we can arrive at a theoretical future prices based on the actual spread traded between 245 to 315 or 3 to 315. That theoretical price of future will reflect the market spread, and that can be applied on closing auction prices. That will take care of the anxiety of arbitrage fund investors. The second is about participation of mutual fund in the closing auction. We have been participating both from active as well as passive, and there are some leeways necessary to ensure that our participation can be meaningful. Hopefully, we are in dialogue with regulator. They are always open to hear suggestion, and that will make closing auction even more meaningful.
Okay, Nilesh bhai, just a follow-up here. I mean, a lot of debate around the introduction of CAS, the timing at which it has been introduced as well, and maybe some misinformation too. But I reckon that one of the things is that this is the mechanism that is used at various markets in various jurisdictions across the world. Are you happy with the timing and the way it has been introduced, or do you think that there could have been a different format for the closing auction session, or a different timing might have been more suitable for the closing auction session?
Neeraj bhai, change is always going to be difficult. And as a regulator, they will whatever they do, there will be always some criticism. So I don't think so timing-wise. In fact, it is better late than never applicable here. We could have launched closing auction earlier also. So we are bringing our market at parity with the global standards. In many cases, we are setting the standard like T+0 settlement. Change obviously has its own impact, but I think closing auction is now behind us and our markets will move forward.
Okay, guys, so if anybody had doubts around that, that is sorted. Sorry, you had a question on the closing auction session?
No, I have a different question.
Okay, so then before we get to your question, I have one follow-up, Sharad, and which is one more thing that Nilesh Bhai has been at the forefront of talking about, and which is gold, right? All of us invest in gold. Indians invest in gold in a big fashion, and I believe, Nilesh Bhai, you pitched SEBI for gold-linked products and REIT funds. I've written it down, and which is why I'm reading from there, right, to channelize those savings. Now, how would you... Let's say to all of us here who are sitting out here investing into mutual funds, investing into gold, what would you tell us? Would it be prudent to channelize all of our savings or majority of our savings into mutual funds because equity creates great wealth? Or would you say bifurcate it between mutual funds and gold, finalization assets, etc.? How do you kind of advise us?
So one is the advice from asset allocation point of view.
Okay.
We have always recommended investors that you need to invest across debt, equity, real estate, commodities, including gold, silver, and global assets. This we were saying yesterday, this we are saying today, this we will see tomorrow. There will be no change in it. Second, when you are investing in gold, there are options available in mutual fund like gold ETF, gold fund of fund, or gold silver fund of fund. These are all convenient way of investing. The product which I had proposed for SEBI is to allow us to use gold options. Today when you invest in my gold fund of fund or gold ETF, I will deliver return in link with the gold prices. Gold prices go down, I will go down. But if I'm buying options on gold, it's possible for me to create principal protected gold fund. If gold prices go up, you get full participation. If gold prices go down, I will let my option expire and there will be principal protection. We need to be innovative on gold. When you are buying physical gold, you will import $100 worth of gold. When you are buying options, maybe you will buy 5, 7, 10% in options. So all my request is that let's be innovative on gold, so that we can leverage our frozen savings for the growth of the economy.
So you're saying you are pitching for products which would bring down the overall import of gold, but still give people the returns mirroring gold price movement.
Absolutely. And that's just one dart thrown, one arrow thrown. You need to have multiple other things. Like, in El Salvador, someone launched Ether, a crypto backed by gold. They had to keep gold in Switzerland to attract investors. Indians are the largest owner of gold in the world. Why can't our startup launch crypto backed by gold or a stable coin backed by gold? If you launch stable coin backed by gold, the price movement of gold will be with issuer, not with investor. Can we have gold monetization scheme? We are sitting on 35,000 ton plus of gold. Can we recycle it? Can we launch gold bonds like the sovereign gold bond, but backed by the physical gold? Today, when physical gold sits in Neeraj Bhai's Tijori, it doesn't reflect in RBI's balance sheet, even though money has gone out of India.
That's true.
I can give you gold bond backed by physical gold sitting in RBI's balance sheet. Reserves will at least go up. So there are multiple options available to monetize gold. My favorite dialogue I have repeated often, इतिहास कहता है भारत सोने की चिड़िया था, बट आज हम कस्तूरी मृग है जो FDI के लिए, FPI के लिए दर दर भटक रहा है. But in our own Tijori, we have 125% of our GDP. Let innovation monetize that gold in a manner that we become Kasturi Mruk to Sone ki Chidiya again.
Okay. Well, one way that I think we can do this, and I'm going to save this for the end of the show, is Nilesh Bhai usually has a complete know of the regulatory framework as well. He may not have it this time around, but at the end of the show, the last thing that we do on the show today is request Nilesh Bhai to give our very capable startup entrepreneurs an idea for a gold-backed startup, right? A tech-based, gold-based startup, which they can do, which will save the country Forex and at the same time get investors to invest in gold. So Nilesh Bhai, that's at your door. We'll do this as the last thing on the show today.
Sure.
Right. Before we move on to the next thing at my end, questions. Sharad, you have a mic. You have a question. Please go ahead.
Yeah. Hi Nilesh, bhai, welcome to NDTV Profit. One interesting query, you spoke about Rishabh Pant. Now he has hit 100 sixes in the test matches, right? But it seems like small caps and mid caps are also hitting sixes and fours. Of course, we are concerned about Nifty, the large caps. So what do you see? Which sectors are hitting sixes and fours here in the mid caps?
So Sharad, clearly small and mid caps earning growth is running at double the pace of large cap. If you don't put enough power in the stroke, you're not going to go to 6. The small and mid caps are hitting 4s and 6 because their earning growth is 30% plus for last 2 quarters. Sectorally, if we see, metals have done very well. Metal converters have also done very well. Then industrials have done very well. Then some of the NBFC and PSU banks have done well. In fact, bearing oil marketing companies and energy, every other sector we have seen either in line with expectation results or ahead of expectation. It's almost unbelievable how corporate India has delivered this kind of earnings growth in a falling rupee, rising crude prices, supply chain disruption, and monsoon worries. On a bowling pitch, clearly India Inc. has betted like Rishabh Pant betted yesterday or in the first test.
So is there any kind of, turning pitch or some sectors which you should avoid,
So my feeling is that in today's market, I don't think so people are investing at least at institutional level in badly governed company. 1 or 2 of our calls can go wrong, but by and large we are investing in right businesses. And sometimes, there are campaigns, like we invested in one of the startup companies IPO, and everyone on social media was jumping us, saying and accusing us. Today that stock is up, one of the best performing. So, remove the motivated campaigns. We don't know why people, do that. But overall, I think badly governed company, institutional investors will not be there. So effectively, you have to focus is on valuation.
Was that investment under the lens, Nilesh bhai?
Absolutely. It was under the lens of the market. And all those guys who, wrote nasty things, they are not apologizing. They'll move to next script.
Yeah, I think that's the nature of the times that we are living in.
Yeah.
But can I ask a follow-up to Sharad's question? Will investors be well served if they have 11 Rishabh Pants in their team right now at the current juncture? Or is there a dire need, looking at the pitches, to also have a Rahul Dravid and a Cheteshwar Pujara in the team?
So it all depends upon your risk profile. If you are playing gully cricket, where once you have taken the betting, you can go out, then might as well have 11 Rishabh Pants. Anyway, you are not going to bowl. But if you are playing a real test match, then you need to have Cheteshwar Pujara and Rahul Dravid. You need to have your Bumrah and Prasidh Krishna as well. My recommendation, figure out what game you are playing. If you are in test match, have a balanced team. If you are gully cricket where your rules are my way or highway, then you can do whatever you want to do.
I have a disclaimer. I was a cheat. All the kids in my society were younger than me, and I had the bat. And my dad gave me a little bit of money to take the bat, also purchase it. So I used to go down and I used to be like, पहला batting मेरा है क्योंकि bat मेरे पास है.
Absolutely.
आपने भी किया है?
I never had the bat with him. So I was always fielding. I am a victim of your kind of player.
Okay. Nilesh bhai, just a follow-up there for one more to what Sharad was trying to ask you, and probably asked you very well. I'm trying to make an attempt to. Is that one is that you can have an ideal mix of 4s and 6s, etc. But who are the Rishabh Pants currently? Because when one look at quarter 4 and quarter 1 put together, healthcare in general, but CDMO or diagnostics, hospital chains, etc. have done very well. Some of the chemical companies, both in quarter 4 and quarter 1, the results were good and the commentary is also looking solid, etc. And if the rate hikes are going to come, then everybody's saying banks will be the next Rishabh Pants because they will have everything in their favor. Balance sheet is looking okay, etc. Where are the Rishabh Pants for the next 6 to 9 to 12 months?
So
Which sectors?
You don't pick up Rishabh Pant with 6, 9, 12-month horizon.
Okay.
It's quite likely that he may be driving in a fast lane and end up meeting with injury.
Okay. So do it for 3 months.
So do it for 5 years, 7 years, 10 years.
5, 7 years. Okay.
Don't
sorry.
do it for
I
3 months,
misunderstood.
6 months. Number 2, there are contradicting trends which you'll have to keep in mind while finding out Rishabh Pant. For example, on consumption, you have 8th pay commission coming into play. It's effective 1st Jan 26. It's not been incorporated in the budget of FY27, but chances are that it could come in revised estimates of FY27. If not, it will certainly come in FY28 budget. From 1st Jan 26 to 31st March 2028, there will be payout of about 7 lakh crore. Now, it could be paid part here, part there, but there will be that kind of income. Where will this money be spent? That will boost the consumption. On the other hand, there is higher consumer debt to GDP ratio. It's increasing, and it can't keep on increasing forever. At some point of time, it will be flattening out. So people who are consuming by borrowing debt will get impacted. Now, when you're trying to find Rishabh Pant in consumption, please ensure that you are in those products and companies which are going to benefit from 8th pay commission, but at the same time which are not relying upon consumer debt for their sales. Same way in industrials. So you'll have to find out your Rishabh Pant in the niches in which top-down things are playing out, and bottom-up you have to pick up the right stock.
Okay, leave the cricket analogy aside, but are chemical companies, pharma companies looking good, Nilesh bhai, because they are cyclical? And I know you look at these very closely while you look at the AMC by and large, but there are some themes that you've...
In chemicals, we believe specialty chemical companies should do well.
The cycle is turning.
The cycle has turned around. They had huge competition from China. They had expanded capacity and suddenly they got hit with lower prices. So they all have cut cost. They have debottlenecked their plant. Now today they are as competitive. And fortunately for them, rupee depreciation has come handy. So combination of cost cutting, debottlenecking and rupee depreciation has turned around the chemical sector. Will there be good opportunities there? Answer is undoubtedly yes.
Okay. Well, we'll talk about more of the sectors as well. And I know some of my fellow colleagues have some questions too. But just before I do that, I'm told that there is a viewer query. Should we pull up the viewer query? I'm asking my producers and ask Nilesh bhai, what is it that one of our viewers want to say? So this is the query from Sushri from Delhi. I hope I'm getting your pronunciation right, Sushri. But the question is, the view that you have on the pharmaceutical sector, Nilesh bhai, any new entrant that you think is doing well as a theme, if not a specific stock?
So in pharma, a lot of new entrants are doing great work. Some of them are obviously in the themes of CDMO. Some of them are in the process of APIs and generic. If we expand the pharma sector to cover hospitals and healthcare, again there is a consolidation happening with insurance penetration and people spending more on healthcare. Hospitals are benefiting. So overall we remain fairly positive on healthcare sector. Our view is that as income level goes above, let's say $2,800 per capita, spending will shift from food, clothing and shelter to probably education, healthcare, entertainment, travel, tourism. So now probably from staple to discretionary, including healthcare, is the theme to focus upon.
Okay, Sushri, well, I'm guessing you got your answer, and in the way that Nilesh can give it best with the limitations that he has, right? He will never comment on specific stocks. Remember that. What we need to do is slip into a quick break. When we come back, Piyush has a question, I'm sure, as do a lot of others. We'll slip into a break, come back with more. Stay tuned. You don't want to miss this town hall with Nilesh bhai.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
लॉर्ड्स मार्क इंडस्ट्रीज, हमेशा आपके साथ।
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our capital jet, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show.
Back to the NDTV Profit Town Hall with Nilesh Shah of Kotak AMC, and we've had a fabulous set of themes discussed thus far, including a startup idea, which we're going to ask him at the end of the show to repeat with all the regulatory caveats. Remember that. But we're taking questions from viewers, so please send in your queries if you have. And one of the queries that has come in, Nilesh Bhai, and pertinent, we start off the second segment as well with a market query. Bharat from Hyderabad is asking, will we see March lows again? Nilesh Bhai, are you bullish and therefore do you believe the markets will rally from here, or is there a higher probability of touching the lows before touching the highs?
So Bharat Bhai, one should never say never in the market, but based on today's news, March lows looks difficult. Earnings have recovered well, valuations have corrected. On today's news, I don't foresee March lows coming into play.
Which is very good. And by today, you mean the recency, Nilesh Bhai, or is there something specific that's happened?
The current macro scenario at $90 of oil, that's already priced in. US Treasury at 470, that's priced in. Rupee at 96, that's priced in. Earnings growth, that's priced in. Political uncertainty, if any, that's priced in. So unless until there is some news, like US Treasury going to 5.5%, then can March lows come? Probably yes.
Okay, but you're saying the three big things that we talk about every day on the channel, which is the treasury yields, which is crude. You're saying at least the two of them are priced in the current Nifty levels?
Yes.
Okay, very good. Good to know that. Piyush, your question, please.
Good morning, Nilesh Bhai. Two queries. One is on the banking sector. The net NPAs are at historic low, less than 1%, first time ever. Do you see banking sector continue having such good credit cycle, or there could be certain pockets of stress? We have seen one of the largest, even the largest private bank, it has seen a spate of developments over the last couple of months. How do investors look at it? Because from the bank end as well, we have not seen much communication per se, except for what is going on the exchanges, and informally or formally, we have not seen much communication there. This is one on the banking sector. Second is on the RBI's proposed guidelines on for NBFCs on revolving credit. One important product that has been talked about is flexi loan, also loan against shares. Our understanding is that NBFCs are, representing that a few adjustments be made in this particular draft. What is your view on this guideline, sir?
Sure. So banking business and market could move at a different pace. In some sense, in banking sector, we have seen FPI selling along with IT sector selling. And when there is a aggressive selling going on, the stock prices are unlikely to recover even if the businesses are doing well. And that's exactly what happened in banking. Businesses kept on doing well, selling continued, the valuation got derated. Now our banks are trading either in line or below global banking averages. From a business point of view, I see no signs today, including in small and medium enterprises, large cap sectors, sensitive sectors like real estate, where NPA pressure is building up. There is some pressure on the unsecured consumer loan, but it's all within the expected range. So unless until something changes fundamentally, I don't see NPA level building up. The credit quality standards are good. The scoring system like CIBIL is working well. Corporate India is deleveraged. Put together, NPA level should continue to remain around current level. The problem with the bottom is that you can't go further down. You are already near the rock bottom. From an NBFC point of view, undoubtedly revolving credit facility circular is putting them under pressure. There is a need for refinancing, and there should be a differentiation between refinancing versus revolving credit. NBFCs have made their point with the Reserve Bank of India. I'm sure regulator will evaluate the same and try to create a balance where revolving credit does not result into kind of evergreening of loans and go back to the old NPA cycle. At the same time, legitimate needs of the economy can be met.
Thank you.
ये बहुत ज़्यादा इंटेलिजेंट क्वेश्चन था. मैं थोड़ा कम इंटेलिजेंट क्वेश्चन पूछता हूँ नीलेश भाई. सुबह सुबह हम लोग जब बात करते हैं तभी ये सोचते हैं कि बैंकिंग स्टॉक्स लेने चाहिए या नहीं, सिंपली बिकॉज अगर क्रेडिट ग्रोथ 17-18% है, बैलेंस शीट्स क्लीन है, और अगर रेट हाइक्स होने वाले हैं तो इट शुड ऑल बी फेवरेबल फॉर बैंक्स. क्या ये आर्ग्यूमेंट सही है?
Undoubtedly, the only missing link is up to what price FPIs will sell. When there is a selling, no one is going to give easy exit to FPI. And they have been selling in Indian IT and banking sector, especially large cap IT, large cap banks. Moment their selling gets over, we will see price recovery.
Okay.
And obviously it is based on all the fundamentals which you have mentioned.
But I have a follow-up to this, Nilesh bhai, which is that traditionally we used to look at the extent of under ownership or over ownership that a particular class of investors have, and that also determines what the next leg of action might be. Currently the FIs must be the most under on the ownership chart, the most under-owned of Indian equities in a really long time. Does that play into the minds when foreign investors come out to sell or buy? Because you must be speaking to a lot of them. Is this argument faulty or is this real?
So in some sense, we have to always look at relative valuation rather than absolute valuation. वो अकबर बिरबल की कहानी थी. अकबर ने लाइन ड्रॉ कर दी और इसे बोला, बिरबल को बोला कि इसे छोटी कर दो, without touching it. The only way that was possible by drawing a bigger line down below. If other markets are doing better than India in terms of past performance or future expectation, quite likely that FPI's allocation will go over there. In fact, if we see FPI selling over last 10 years, whatever they have sold in secondary market, they have bought equivalent amount in primary market. So effectively they are selling secondary, buying primary. There's not even a single IPO, including the one under the lens, where we didn't compete with the foreigners to get our anchor allotment or our quota. Second thing, within the overall universe, FIIs have sold mostly banking and IT sector, some of the energy companies, but they have been continuously buyer of small and mid-cap companies. Today, 100 plus small mid-cap companies have all-time high FPI holding. So there are nuances within FPI activity, but ultimately it's whether my line is looking smaller or bigger compared to my peers.
Okay. So difficult to judge that, but just one thing on the DII strength, and a common friend of Nilesh bhai and mine, who is a premier banker in the country, told me recently that FPI is now telling him कि यार ये block आ रहा था, अच्छा block था, हमारे तक बात ही नहीं आई, because the entire block was taken by DIIs only, because now domestic mutual funds are so powerful as institutional investors, much more powerful than what they have ever been in the past, which is such a great thing, by the way, because it's all Indian investors' money, right, Nilesh bhai?
So with great power comes greater responsibility. And while many of us wants to portray DII as big guys, bulky guys, that's not the case. We are very clear in our mind. Our job is to make money for our unit holders.
Of course.
And we will do whatever is appropriate for our unit holders. Can some of our calls go wrong? Undoubtedly, yes. But today, as we speak, majority of our funds are outperforming their benchmark indices. They are adding value to investors. And while 2 years returns are nothing noteworthy, the 3-year returns are still in high single digit to low double digit, which is not bad. When inflation is low single digit to mid single digit, this real return is as good as what was there earlier.
Yeah, I think, and just before we take the next question, I think the argument that comes in is that at times when there are no returns or low returns or flatline returns, people bring in the argument, oh, but FD में पैसा होता तो 6% मिलता, तो FD में ही पैसा better था. They don't bring this argument out when the returns are 9, 10, 11, 12% CAGR, right? That is the problem.
I have always answered that question with a simple thing. Please show me a rich person who has become rich by investing in FD. And I'll show you as many rich people who have become rich by investing in equity. Choice is yours.
Yeah, well, that's such a powerful line. Okay, great. Okay, more questions. And Shivam, you had a question. Maybe we go to you first. Yes, please.
Yeah, hello, sir. Sir, Indian markets have seen a stronger support from the domestic inflows and also from the increasing retail participation. But on the other side, we also have the geopolitical uncertainty. So, if an investor have to start afresh a portfolio, so where do you see the most compelling opportunities over the next 5 to 10 years, and any bigger risks that are underestimated and should be kept in mind for the investors?
So, the only risk which a young investor should be aware of is the risk of not investing. If you keep money, let's say, in currency notes, it's termite eating currency notes courtesy inflation. If you invest in equities, of course it will go up and down, but probability of making money over 5-10 year period is infinitely higher compared to keeping it in cash. So the only risk as a young person you should be worried about is inflation and real return. You will miss out by not investing. Now, where you should invest? First, start with a diversified equity fund, a large cap, mid cap, small cap, multi cap, flexi cap, whatever you are comfortable with. Start via SIP. Do SIP top up as your income increases. Get comfortable with how markets operate. When negative return comes, how is your feeling? Can you conquer that? Once you get that into play, then you can think of going into direct stocks and so on and so forth. Many people start their car in the 5th gear by doing F&O trading. That's disastrous. That's not going to help you make money. If you are lucky and God is with you, then maybe you will incur losses and get the experience. But if you are not so lucky, then you will make initially some money, you will end up taking a bigger risk and you will have to pay a bigger price.
Okay, I hope that answers your question. Alex, over to you. And then we'll get a couple of viewer queries.
Yes, for sure. So, Lagta, Nilesh bhai, you watched the Spider-Man movie recently because you are quoting the dialogues. But having said that, let me ask you about valuations, because we've spoken, I think, on the periphery about relatively new age companies, and the way that they do business is very different. And a lot of mutual fund and institutional participation at the primary level as well, right? So what is the way that mutual funds are now looking at these companies? Because obviously the framework and the measurement of valuation that you would use traditionally is not appropriate. I mean, you look at an FMCG company, you can justify a 70-80 times PE, but you can't look at PE for a startup or a new company. So how do you look at it?
So undoubtedly, Alex, it's an evolving subject. Not all of us have experience in valuing startup. We are also learning. And some people can say also that we are learning at other people's money. But that's my job. What we have understood at this point of time, in the new age industry or sector, winner takes it all. If you are market leader, you will have 60% market share, highest margin, you will take all the profit. The number 3, number 4 guy in that space doesn't make money. So you have to always try to identify winner. To remain winner or to become winner, you need capital. So either you have access to capital through your sponsor, or you have enough cash on balance sheet that you will be able to fight it out. Third, despite having money, you need a path to profitability. Based on your targeted market share, based on your volume, you will have to create a path to profitability. Now, whenever your quarterly results come and it is bringing path to profitability earlier, then we are buyer in that stock. Sometimes we get shock also, and the path to profitability gets deferred. We are seller in that stock. Is this the best way to invest in startup? Answer is undoubtedly no. Will we add more variables into it? Undoubtedly yes. But we have to deal with what we have in hand today. And this model seems to be working.
Okay, I guess that does give an answer to your query. We have 10 minutes and I think we've got 2 or 3 more queries. But just before I take the queries, and there is one more that has come in. I have a follow-up, Nilesh bhai. What are the risks to the returns for the Indian markets? Could it be, to your mind, and it could go wrong of course, but to your mind as things stand right now, from this Ganesh Chaturthi to the next Ganesh Chaturthi, is the maximum risk that of flatline returns, or could there be 15, 20% downside. I know you answered in a previous question that never say never and March lows may or may not come, but I'm giving you a 1 year time frame to try and tell me this.
So there are risks which are there on the horizon. The first is obviously the geopolitical. As of today, it looks like that crude will remain in double digit and not in triple digit, and supply of crude gas will be available. If those things change, then obviously outcome will change. The second thing to watch out for is US Treasury, especially the long end. If that continues to rise, investors will shift allocation to equity, allocation to fixed income rather than equity. But those are external shocks. There's no control of ours on them. The domestic side is essentially the earnings growth. If that earnings growth is coming, I don't foresee any other risk. All other risk will be able to manage. And why am I only focused on earnings growth? Because if you had asked me in April 26, will India Inc. deliver this kind of earnings growth? My answer would have been empathetically no.
No, yeah.
With oil, monsoon, rupee and geopolitical, I would have said, Neeraj bhai, impossible. But it happened. So as long as earnings growth come, everything else can be managed.
How does India Inc. do this? When the backs are pushed to the wall, we saw this in COVID as well, Nilesh, by the COVID quarter. Somehow, magic happened, right? Tighten the belts, deliver margins, deliver earnings. It's happened this time as well. How does India Inc. do it?
So partly they have benefited from inventory gains because metal prices went up and your stocks delivered you extra return. Partly it has happened because of cost cutting. Back to the wall, might as well go and start hitting. The third probably is also deft management by regulator. RBI managed liquidity quite well. The government managed supply chain quite well. The prices were up, but the commodity was always available. So I think it's a combination of a nation coming together in a crisis situation, be it government, regulator, and private India Inc. together.
Okay, and we saw that performance in your quarter one numbers and the quarter one commentary as well, viewers, because a lot of sectors, a lot of managements which have come on NDTV Profit and of course other platforms as well have spoken very strongly about what has happened in quarter one not being a one-off necessarily, at least where they have a control on. So, and therefore that's a very important thing. Okay, a query, Nilesh bhai, from Pranay from Mumbai, and Pranay is asking, which sectors fit the no debt bracket? I think this must be in reference to the point that you made earlier that you have to be careful of companies which will suffer from having debt or benefit from companies which have a no debt. So which sectors fit that bill?
So Pranab bhai, my focus was more on consumer debt. For example, 2/3 of mobile phones sold in India are sold on consumer debt. So clearly those sectors could get impacted. Whereas people who are buying, let's say, perfumes or watches, they are not necessarily going for consumer debt. But debt is a necessary evil. If you have zero debt, your ROEs do get depressed as long as your return on equity is more than the cost of debt. And if you have too much debt, then it creates benefit while leverage works in your favor and cuts you when leverage is against you. So my recommendation is to always go for those companies which have appropriate level of debt, not too high, not too low.
Okay, but Nilesh bhai, isn't buying of these durables almost become how do I say, a non-negotiable factor? I mean, how do, even if it's being bought on debt, how do people go about not buying a mobile phone? It's for some people it is more important than the left arm as well, right? So how would this consumption suffer?
So, debt excessively will result into multiple ways of break. One, companies will stop giving because your score would have deteriorated.
Sure.
Second, you will have to pay higher interest rates and hence you will calibrate your purchase. Today, let's say, if you are changing your mobile every 3 years, could you change it every 4 years? If that happens, straight away, 1/3 of demand gets deferred.
I hear you. Okay. Well, and you sense something like that is happening in retail credit?
It should
We are
happen.
getting over leveraged?
It should happen. Consumer debts are becoming elevated. Now, bulk of the personal unsecured loan is constituting part of the retail loan. So my feeling is that at some point of time, we are going to see some brakes being applied, either by virtue of denial of credit or by virtue of higher rates.
Can I tie it in with what Piyush was asking then, Nilesh bhai? I heard Piyush say, and I may have not got it completely correct, but loan against shares is being spoken about. And we know that loan against mutual funds, for example, which is being already a product existing, comes in at 9%, 10%. Personal loans come in at 16%. A lot of Indians now have mutual fund portfolios. They just don't know that such a mechanism exists wherein you can borrow at 9-10% against a steady product versus a personal loan. Isn't that the most obvious thing to do then?
So that's where financial literacy matters, financial awareness matters. Many a time people don't understand basics of finance. They end up borrowing at a much higher rate and they don't leverage what is there in their portfolio.
Okay. We end with two key things. Nilesh bhai, one most simple financial advice that you can give to all of our colleagues out here. Some are at the start of their earning journey. Some like me have spent 3-4 years and are not quite old. And then some like Alex who've been in this industry for 15-20 years, so are old. So can you give us some advice, please?
So I think there's only one advice. More people have lost money waiting for correction than in the correction. Stay invested.
Alex, that's for you. Profound advice. Okay, Nilesh bhai, now final question, and then of course we'll love to know whether you indeed did see Spider-Man or no. But before that, like I said midway through the show, a lot of startup entrepreneurs actually see financial shows, right? And you gave an inkling of an idea. Maybe it is not a full idea in your mind as well. Maybe there are some chinks in the armor, but you don't say it without having adequate knowledge per se. I would love for you to tell us, what is this whole gold product idea that you were speaking about?
So I just hope and pray someday Indian startup launch a product like Ether. It's a crypto launched out of El Salvador, backed by gold kept in Switzerland. Indians are the largest owner of gold in the world. Everyone knows that. So if we keep gold in India, people will accept it probably. Second, by launching crypto, you will transfer the gains and price movement of gold to the investor. But if you can launch by way of stable coin, then the price appreciation, depreciation can be kept with you. Like today, there are stable coins backed by US Treasury, where the returns of US Treasury accrues to the issuer, not to the investor. We can copy the same concept on gold. A lot of our savings is frozen in Tijori. By giving this crypto or stable coin, we'll be able to monetize the same. Gold will still remain in India with price movement maybe shared with investor or maybe not. But you will be able to monetize that gold. You'll bring FX into India. We have 125% of our GDP lying in gold, silver, diamond, pearl. There's no other nation which will have so much of wealth locked in unproductive manner. Gold prices have gone up. There is appetite among investors. Why can't our startup leverage it by launching a crypto or a stable coin?
Okay, this will, of course, viewers, so anybody who's listening to this is the start or the germination of an idea. You will have to do your own homework, look at the regulatory framework, consult lawyers, do everything. But when Nilesh Shah is giving you an idea, free of cost on NDTV Profit, you got to take advantage of it. So thank you so much for that, Nilesh bhai. We have to end with a fun element, right? So Alex was saying that you quoting some Spider-Man dialogue. So did you see that movie?
Of course.
Oh, you did? Okay.
You have to ask how many times.
Oh, is that so? How many times then?
I guess probably 7-8 times.
More than Dhurandhar? Or did you not see Dhurandhar so much?
Dhurandhar I saw, but I haven't repeated it yet.
Aha.
But Spider-Man, like as kids, as grown-up kids, that's all-time favorite.
Okay, interesting. The debate on the show today in the morning, Nilesh Bhai, was that now people are waiting for Avengers Doomsday, which is coming in December. I was not completely clued into that argument, but apparently Wolverine is going to make an appearance there too. I don't know if you follow Marvel, but if you do or if you don't, are you looking forward to all of those releases, and therefore should the PVR owner be happy?
I think his announcing that he is doing buyback of shares shows that he believes his company is undervalued at this point of time. And post buyback, if there is a super hit movie which brings customers into Forte, I'm sure he'll be super happy.
No, his social media team will be recording if Nilesh Shah is walking into a PVR or an Inox. I'm trying to understand that. Are you going to do that through the year?
Oh, they should just put someone at Juhu PVR. I regularly visit there.
See, we're giving so many ideas to people across, including Ajay Bijli. I hope he's listening into this as well. But Nilesh Bhai, so good talking to you today. Thank you so much for being with us. Thank you for taking the time out and giving some amazing pieces of advice to our viewers, my colleagues and me here, and everybody who is watching this live.
Thank you.
Right, and viewers, thanks for tuning into this very special edition of the Town Hall at NDTV Profit with Mr. Nilesh Shah of Kotak Mahindra AMC.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our capital, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters. A world of questions.
Weakness persists. Global cues and expiry weigh on Dalal Street today as Nifty trades below 24,200 level. Broader markets move in tandem with the benchmarks. Sectorally, PSBs and pharma stay resilient while all others trade under pressure. Hindustan Copper shares are under pressure after the government announced an OFS to sell up to 6% stake. The floor price is set at 514 rupees a share at a discount to the previous close. The offer is open for non-retail investors today, with retail bidding starting 26th of August. DIPAM Secretary tells NDTV Profit the government is focused on ensuring investors make reasonable returns. He says that the Hindustan Copper OFS could be the last one, but more OFS deals are likely in the future. DIPAM also remains confident of achieving the 80,000 crore rupees FY27 divestment target. IIFL Finance is under pressure after its subsidiary IIFL Home Finance received a 963 crore rupees income tax demand. The demand covers assessments from 2018 to 2025. Management tells NDTV Profit the demands are part of the regular process, says they will appeal the demand. Fertilizer stocks are in focus after Russia assured India of uninterrupted energy and fertilizer supplies amid West Asia disruptions. The assurance came after Jaishankar's meeting with Putin, easing concerns over India's fertilizer availability and supporting sentiment across the sector. Sunshine Pictures and Sankesh Jewelers made a modest market debut today, listings at premium to their IPO prices. Both stocks, however, later slipped below their listing prices, tempering the initial gains. Hello and welcome. You've tuned into Markets at 12 and I'm Nisha Poddar. And yes, their worry really continues for the Indian markets. And today as well, if you really take a look at the chart, giving up on the 24,200 level is a worry for the Indian market. But let's take a look at where is the maximum damage really coming in from. Well, it's a sea of red when we look at the charts today across the board. Pressure really visible, but not a visible sell-off momentum. So mid-cap 100 index, that's also marginally in the red. When we talk about the banking sector as well, that's also marginally in the red. So there is a persistence of some bit of pressure, but not an accentuated sell-off. That's what the market is looking like as of today. Now, ICICI Bank, Eternal, Adani Enterprises, Bajaj Finance, SBI, some of the top gainers, adding a few points to Nifty 50, but Nifty 50 at this particular point is losing over 50 points in trade, and a large part of that is really coming in. And if you take a look at the contribution chart from across the board, pressure that is seen in minor capacity from all the heavyweights that are on the downward trajectory today. So may it be Reliance Industries, HDFC Bank, Grasim, HCL Tech, Tata Steel. So across the board, there is a little bit of pressure, which is eroding about 50 points coming in for Nifty 50 in terms of the downward momentum. In the sectoral play also, hardly a few sectors like PSU banks, financial services, pharma in the green, rest all seem to be under pressure at the current moment. Let's get chatting about this particular market pressure points and how to really assess this market and still make money. Anirudh Sarkar, who is the co-founder and CIO of Equinova Investment Manager, joins in now. Anirudh, always a pleasure to get chatting with you on NDTV Profit. How would you play a market like this, which has been, listless, tentative, as well as open to the vagaries of various global cues?
Afternoon, Nisha. I think, you have put it very aptly that, market is completely kind of the listless market. And, when we talk to investors, I think a sense of absolute, you can say the kind of the frustration is built up among investors, wherein, whatever they buy, it doesn't move, portfolios don't go anywhere. But, you keep seeing that, there are individual companies which are doing very well. So it's a bit of kind of the lackluster market wherein, I would say that animal spirit is missing in a big way. But having said that, if I look at where the confidence is building up, I think if I look at the earnings which came around in this quarter, the first quarter of FY27, I think it was a decent set of numbers. And if I look at earnings across various industries, various sectors, I think it was one of the best numbers we have seen after a long time. Whether it is large caps, mid caps, and small caps, but obviously the small caps have continued to do the best. So I think the ingredients are there in place, which can bring the markets up. But I think the confidence among investors is lacking.
Right, and in fact, Anirudh, while the global cues are something which is not under our control, and especially the crude oil prices, do you think that a large part of the negative sentiment has been baked in, and now that the market is a little tentative? So, moving ahead from this, what are the internal factors that you are really weighing? How much of that is really capitalized in the market valuation, and how much remains to be baked in? Namely, the El Nino impact, the consumption theme playing out, offset by probably a better, longer festive season. And therefore, some of these factors really come together to make the momentum for the rest of this calendar year.
I think almost every month we come up with something new, which kind of hurts our market. And while if you see, good part of this year was spent around getting worried about oil, Iran, etc. And in fact, beginning of the year it was all about the US tariff and where the India-US trade deal will head. And then from beginning of March we are all into the war and oil prices. But I think the Iran war definitely is not going to come to a kind of, I would say, come to an end before the midterm polls in the US. And that is definitely something which is keeping the oil prices also elevated. So something which I would say the market was expecting that, whenever the Iran war gets over, you'll find the oil prices coming off very sharply. That is not happening. And I think that is also keeping the markets a bit worried that inflation is going to be there for a much longer period than what it was anticipated earlier. Apart from inflation, I think, I would say base effect will also start coming into picture, because last year, October, November is again wherein, the numbers were again decently well. So I think the base effect will come into picture. Inflation is hurting. I would say with regard to the monsoons, yes, we have done it. We have done better than what was expected 6 months back, wherein the big worry was that, you will have a huge deficit in rains this year. But I think still, pan India, I think the monsoons are still below what should be a good year. But yes, it is better than what was worried initially. With all these uncertainties, I think, market is worried about how the next half of the year will be. If I talk about the second half of the calendar year, because if I look at the guidance from most companies, I think, most companies are saying second half of FY27 will be good, but you could see some amount of pain in the next quarter. So I think that is where, investors are not getting a confidence.
That's right, Anirudh, well pointed out. And you added one more aspect, that is the base effect. In the last year, in Q3, that base effect will also start showing up. Another, thing that is being talked about and is expected is that inflation-led RBI measure. And people are starting to pencil in the 25 basis points increase, if at all, though economists do also argue that it is a supply-side inflation. So therefore, RBI will take a very concerted, look at this particular aspect. So looking at the earnings as well as the inflation being high, and let me add that economists had added $80 per barrel as an average for this year. Now it looks like it's flouting, and for a large part of this particular quarter also we have seen the oil prices above the average level. Looking at this, what is it that you're estimating from the earnings going forward, and how much of that do you think has been baked into the market momentum and valuations?
No, I think as you rightly mentioned, I think, most of the factors, which was bothering the earnings, I think they are all at elevated levels compared to what was expected, that, you should see some amount of the descending in this quarter or, in the next quarter. But having said that, I would say the way I'm trying to position the portfolios, and this is something, I've been telling investors, is try to be a bit off companies and sectors where inflationary pressures could impact their earnings. Like definitely you have to be off your FMCGs, you have to be off your all these companies. But where we are targeting is companies where it is more kind of an order execution which is continuing, whether it is the private defense, whether it is aerospace, whether it is power ancillary, whether it is auto ancillary. So these are all sectors where I would say inflation pressure, whatever margin impact has been there, it has all been passed on. Auto OEMs is one area wherein I would say autos has been kind of, I would say, the flag bearer of our domestic upcycle for the last 1 year. There, I would say again, you could see some amount kind of the plateauing because auto OEMs have all not been able to take a price hike to the extent that would have ensured their margins are intact. But at the same time, base effect and also delayed festive season could see some impact in their earnings also. So I would say it's a wait and watch.
Right, Anirudh, very nicely you have segregated the sectors in terms of how to assess given the current scenario, and very, very valuable takeaways from there. Always a pleasure chatting with you and taking your insights on the market expertise. Thank you so much for stopping by on NDTV Profit. All right, moving on to some stories and news developments. And sources tell NDTV Profit that EV two-wheeler maker Bazaar is really exploring around 1,000 odd crore rupees of IPO, combining a fresh issue as well as offer for sale. My colleague Nimit is right here with all the exclusive details. Nimit, what are your sources telling you about this IPO?
Yeah, so Bazaar is a two-wheeler company founded in 2020, and it's exploring an initial public offering at about 1,000 crores, comprising of a fresh issue and OFS. Why this is interesting is they recently also did their Series D round at 110 crores. Now the valuation is still a question mark today, but just to give you context, new age electric vehicle two-wheelers like Ather and also Ola Electric, if you want to put it in that category, trade at revenue multiples above 10x, while the earlier ones, including Hero and TVS, trade at 1 to 2x. So these new age companies are getting a larger valuation as well. But this is a new company. They're in fact going to do a product launch next month as well. And we understand that they're looking to file their DRHP in the next few months. They've already engaged ICICI Securities and Pantomath Capital on this deal. They're also talking to bankers and lawyers and have already engaged lawyers and bankers on the deal. So looks like they'll be moving forward, and they're going with the wind in terms of the IPO market in the second half of this year.
All right. Thank you so much, Nimit, for getting us those exclusive details. And I must also place right here that there are many companies like Kinetic, Ampere, which have really captured the larger volume play in the hinterland when it comes to electric two-wheelers. So that's the competition that this particular company can really face, as is the case with Ola Electric as well as Ather in the listed space. All right, moving on, let's focus on KIMS Hospital. The stock is up in a rather weakish day of trade today, up about more than 0.5%, and KIMS is really expanding its Hyderabad footprint through a 5-year management pact for a REIT hospital, and the 250-bed facility offers an asset-light growth opportunity, with KIMS really earning 9% of the net revenue and also an option to acquire the business later. In fact, Dr. Bhaskar Rao, who's the CMD of KIMS Hospital, joins in with more insights. Dr. Rao, it's always a pleasure to welcome you on NDTV Profit, and congratulations on this particular deal. But give us a sense on what is the performance-related benefit as well as the expansionary benefit that this particular transaction really brings to the fore.
So actually this one is a running hospital, and we bought the business transaction.
Yes.
When we do this one, now today in KIMS we have a lot of capex and things are there. So we thought bringing this one into a loss-making company into our company. Some of the doctors wants to buy out, and they are asking in the next 5 years we will give an O&M contract, and with a prefixed multiples of EBITDA we are going to buy out. So that meanwhile we can able to ramp up this one and take it to a reasonable size with top line and bottom line. and where the loss funding will come down and even the capex will, so whatever is there, they will be able to invest on that. At that time, there is a call option. It is up to us. If it is very feasible and good, we can able to take it, and or we can able to leave it also.
Right. Looking at this, Bhaskar Rao, this particular model is more in the context of an asset-light model where you're taking up the management and operations in order to revive and turn around this particular company. Give us a sense on how much of cost incurring will be done from KIMS on a regular basis. You're earning 9% of the revenue. So how are the dynamics and what is the plan at KIMS in terms of turning around the loss-making business, and what is the estimate timeline that you're really looking at?
We don't need to invest. KIMS is not going to invest any money or even in the participate in the loss making. It is entirely by that company. Whatever is the top line that is there, that we will be able to take a 9% of the top line, so that no burden on as far as the KIMS is concerned. And the recruiting of the doctors and other things we will be able to do. And whoever is the unit heads and the directors we employ, those salaries also paid by that particular unit. So net to net, for in the beginning itself, KIMS is going to get benefit out of this by getting a 9% revenue. We are looking at right now about 100 crores revenue this year. May go up even to 4 to 5x in the next 4 to 5 years. And most of the time we can also do all the capex is done by them, and then we will be able to make the profits in the beginning, and later on with a reasonable price we are going to acquire.
Right. So this is the overall roadmap. But one thing that I'll be most interested in asking you is that what is the timeline of turnaround of the loss-making business? You already stated that 100 odd crores of revenue will be added, which can be 4 or 5 times higher in the next few years going forward. But when we talk about the profit as well as profitability, give us a sense on what are you looking at in terms of turning around the company, and what could be the timelines in which some profits could also come in, and will those profits be also added as part of your balance sheet if they turn positive?
So usually it will take around 6 to 8 quarters for turning around this loss-making company into profitability. After that, once it takes about a year or so, another 4 to 6 quarters will be the time where we can able to stabilize the business. Later on, we will be able to acquire into the KIMS if there is if it goes everything as we planned.
Right. So this model is very interesting, Dr. Rao, when it comes to really taking over a company, turning it around, and then assessing the valuation. Any estimates on what is the valuation, targeted valuation, or at least desired valuation after a few years? Of course, basis the kind of turnaround as well as the performance really takes place. And how will it really help the company in terms of building a larger pan-India presence when it comes to this particular acquisition in some time?
So basically, we are in KIMS, we have got a strong brand in terms of the consultants, the manpower, and also the patients. So it is easy to acquire and attract good talent within the company. So once that good talent comes, along with them, the patients also will come, and because of the brand, so that we can able to turn around. That's what we estimated, about 6 to 8 weeks time we can able to turn around. And this will definitely create a value. We are expecting at least 5 to 6x top line we are expecting than what it is today. With that, definitely instead of going into some other places where we have a facility within the city and where we can also have a good visibility, that is much better than with a less investment as on today. Tomorrow when it comes up, we are also planning to prefix the valuation now itself with some multiples of EBITDA minus the debt which is there at that time.
Right. this, kind of an acquisition, is this the model that you could be looking at expanding further? And what is your, strategy going forward in terms of expanding your base in several other cities and increasing your visibility as a brand pan-India after this particular deal?
So basically what we are having, our strategy is one, initially we used to do a lot of greenfield projects.
Yes.
Now I think the greenfield projects are almost done. Now we were not able to do any greenfield except the place we are already present. If there is an expansion required, number of beds to be added, we will do that. It's not a really greenfield project, it is a brownfield project. And there are so many O&M contracts like what we were discussing about it. Nearly another 10 hospitals are there. These hospitals also we start either merging with us or maybe we keep on acquiring. And moving forward, our strategy is mainly we take about any loss funding ones to take out the O&M contract. And once we are comfortable and understand the culture and the consultants' availability, when it is turned around to be profits, then we try to acquire those things.
Right. Actually, this is a very interesting way of asset-light model of not spending too much, assessing the company, taking over, turning it around, those who are in need of your assistance and money as well, or your management skills, and then looking at acquiring them and also increase your presence. So, Dr. Rao, while private equity players have been trying to do the bolt-on platform for the hospital sector, here in KIMS Hospital, it's an asset-light model of expanding your base and your presence in high-growth market areas. That's how I will analyze this. But when we look at the targets that are there internally for the company in terms of expansion, and you mentioned what are the various ways in which you can expand through brownfield expansion, any guidance on the targets that you have in terms of increase in the beds and increase in your visibility in which geographies, if you can give us a sense on that?
So basically, as of today, we have nearly 10,000 beds are there in both our own and O&M beds. And we have pipeline in the next 2 to 3 years under construction, under the process, another 2,000 beds. So in the next couple of years, we will be reaching up to 10 to 11 to 12,000 beds. That is our target. And the second important thing is, as we planned all these things, as I keep on talking about, whatever is the growth last few years that we've been achieved, both in the top line and bottom line, we should be able to sustain that top line growth as well as the bottom line growth. We are trying to achieve the targets what we have been internally put by ourselves. I'm sure that we are achieving those targets. Like 3 years back, I said we will be able to reach the double the top line. We achieved that in 3 years' time. And over a period of time, we have been keep growing around 18% CAGR in the last decade and a half. And that we want to sustain that thing in the next decade also. That is our aim and plan.
All right.
And most of our, as you asked for, our is in mostly in South India as of now. Andhra and Telangana, Maharashtra, Kerala and Karnataka. These are the places where there is a lot of opportunities still available.
Right.
We will be able to unearth those opportunities and keep growing the way which we want to grow.
All right, Dr. Bhaskar Rao, the biggest takeaway that you will keep looking at asset-light models of expansion in southern part of India and southwest part of India as a strategy to really expand your presence. All the best for that. Thank you so much for joining us on NDTV Profit.
Thank you.
Thank you. All right, moving on to an important development. Well, fertilizer stocks are really rising after Russia assured India of uninterrupted supplies, and Russia says that it will continue increasing supplies if needed. Varsha, my colleague, is here with all the details and the stock impact because of this development. Tell us, Varsha.
Well, overall, this is a positive one, and hence, all the fertilizer stocks, if you see, are buzzing in trade. This is after Russian president says or assures uninterrupted fertilizer supplies to India. This is coming despite West Asia crisis that we are seeing, and Russia says that it will continue increasing supplies if needed. Now this is positive for agriculture. This supports availability of fertilizers to the company. Now why fertilizer stocks reacted in a positive way? Because market is cheering the assurance of uninterrupted fertilizer supplies to India, and hence you are seeing all the fertilizer stocks are buzzing, are up almost 7 to 8% in trade.
Thank you for giving all those details. And it's raining news today, from splitting a dinner bill to really paying for just about anything with a scan. UPI has truly changed the way India pays. And 10 years ago, remember, UPI began its journey with just 2 crore transactions in a year. Jumps to 2026, and that number has really exploded to over 24,000 crore transactions annually. What's the next decade looking like? We have Piyush giving us all those details. Piyush, it's one of the biggest disruptions that our times have seen. What lies ahead?
That's right. From paying your grocery bills to actually buying electronics, UPI has changed the way Indians transact. Here we have made a beautiful chart on the volume growth that we have seen. Like you rightly mentioned, it has risen from 2 crore in 2016 to 24,162 crore annually in 2026. In terms of value, just see the sheer rise from 7 crore rupees of UPI transaction in 2016 to 314 lakh crore rupees of UPI transaction in 2026. We have seen how UPI ecosystem is now live across 11 countries, and 741 banks are actually part of the UPI guardrail. In July, if we see alone, the 2,365.8 crore volume of UPI transactions have happened, amounting to nearly 30 lakh crore rupees. So we can see the sheer scale of UPI usage in the country. UPI is now live in 11 countries and will soon go live in many other countries going ahead. UPI, it was launched, as we are aware, in April 2016, and around 20-21 odd banks were the part of the pilot. In August it went live. Then in next year, 2017, the way we transact, we use the scanner and pay. That was introduced in 2017, QR code based payments. In 2018, finally we saw that UPI mandate was launched where you can set transactions and approve it. Then SEBI also allowed people to invest in IPO using UPI transactions. So that was a big move. Actually, UPI has helped IPO applications as well. The BHIM app, we have seen how it launched in 2019, and that year itself it gave a lot of cashbacks which continue till date. Further, a various set of products like 123 Pay, which is smaller, feature phone based payments, UPI Lite, smaller transaction, credit line on UPI. All these products were introduced, 30% going ahead. The main challenge is for NPCI to enforce the 30% ceiling on UPI market share. As we are aware, there are 2 dominant players in this field, who PhonePe and Google Pay, who command more than 80% of market share. So the big headache now for NPCI will be whether it will extend the deadline further. Already 3 times the NPCI has extended this ceiling deadline. And finally, on MDR, if there is any sort of MDR on UPI, it will be interesting to watch whether people continue using this innovative and digital home run payments guardrail.
All right, Piyush, very well summarized, but completely out of time on this edition of Markets at 12. But keep it with NDTV Profit. Goodbye.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे। केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy, and precision
every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anviksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out
and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट
Hello and welcome back to NDTV Profit. You are watching Trending Stocks from the NDTV Profit Suzlon studio with me, Puneet Zaveri, as well as Sharad Dubey, who is joining in from the NDTV Profit Markets Pit, where all the action continues to be through as well. But Sharad, before we come to you, just a quick check of what we have seen on the IPO front of things as well. So, important listing today of Sankesh Jewellers. That was a counter that continued to be in focus today, up almost 2.6%, has given off some of the gains from the day as well, but made a decent debut, seen some sell-off at this point of time. Stock was up almost 11% at the listing start as well. But to get some more perspective about the management as well and what the outlook is post-listing, we are being now joined by Mahavir Jain. He's the whole-time director at Sankesh Jewellers. Mr. Jain, good afternoon and thanks so much for joining in. The first question largely being on, now that you're a listed entity, what can be the growth aspirations that we can hold from the company for this year? How are you looking at the market scenario at this point of time?
So again, I'm talking about the revenue growth as well. We have always focused on our designing, and as we have our niche in our jewelry. So as we've grown in the earlier years, we expect similar growth going ahead as well, because this jewelry has always been in demand, and the demand for handcrafted jewelry is being growing day by day. So expecting a better future always.
Mr. Jain, I do want to talk to you about your business as well, because you are basically a third-party B2B player for the jewelry companies. You don't have your own manufacturing, so you are associated with 90+ job workers back in FY24. That number has gone to 87, and now 72 job workers or karigars, as you may know, in FY26. Have we seen more consolidation now? Is it something that we can expect going forward as well? How is this particular number that we can look at over the next couple of years or so?
Yeah, so technically that is right. So as we know that the jewelry sector is getting organized day by day with so many players coming in. So we have also been working with the same way. Our suppliers who are there, they are also getting organized. It's just the number which you see is diminished, but the people working under them have increased day by day. So we prefer more working with the organized players nowadays.
And how should we look at the margin scenario? Because since you are mainly a B2B third-party supplier, your margins in that 5 to 7% range is something that you'd want to improve. What can be the margin progression that we see in the near to medium term?
So technically talking about margins, see, as I've spoken to you earlier as well, that handcrafted jewelry has its own niche. It takes its time, its intricacies are always there. So margins are bound. We obviously can fetch a better margin, but yes, as we've grown in the past years, we definitely keep the same track going on forward as well.
The one other question that I had was basically how your business shapes up, right? Because almost 39 to 40% of your revenues comes from your top 10 customers. So that number is still lower as we look at it. How are you looking at this number going forward? Because will you see a lot more consolidation as well as increase from your top 10 customers going forward?
So as you gave me that only 40% of my revenue comes from top 10, and all our retail chains, retail partners are growing day by day, and their numbers are also online where we can see that they are growing till financial year 28-29. So in the same pace, we expect Sankesh Jewellers also to be always a supplier of all the major retail brands in India, and plus always the local stores which we say all around India, they are also getting organized, they are also growing. A single store is getting into 5 stores. So we see growth coming in from all sectors and all pan-India presence as we have. So all around India, we see growth coming in the near future.
Well, Mr. Jain, we leave it at that today. Thanks so much for joining in. A lot more conversation, of course, warranted post your quarterly results that come through post listing as well. But thank you for joining in today. That was, of course, the management of Sankesh Jewellers has given up some gains as we spoke about. But when you look at the construct of the Nifty 50 today as well, today is the monthly expiry as well. So you're seeing some of those moves also playing out on the Nifty 50, but largely a very dull kind of a screen that we are continuing to see across the last month or so. So 24,169 for the Nifty 50 at this point of time as well continues to be the trajectory. Let's also look at the advance decline ratio, because before we move on to the watch list, because what you have seen consistently is a very broad-based kind of a market scenario, and today as well you're seeing that declines have a bigger impact on the market compared to the advances as well. But there are some individual movers that you have to watch out for in trade today, buzzing on the back of big news flow as well as what you're seeing on some government corporate actions too. TCS is the first one that I have on my radar today. They have inked a deal with Porsche. A $1.46 billion deal is what it is, almost 14,000 odd crores, but stock's not doing too much today. It continues to be in the red at this point of time. So is Hindustan Copper, now down almost 7.75% stake after the OFS, and the DIPAM secretary, while speaking to our channel in the morning, confirmed that this will be the last of it. You won't see too much of it right now going forward in terms of selling and more offer for sales, especially for Hindustan Copper, but that counter is under pressure today. Cummins India is the other one. There is some strong commentary that's come through for the data center business, and hence that counter is in green right now. Balram Chini is the other counter. All sugar stocks continue to be in focus this week as well. The governing body essentially has said that they have sufficient sugar stock available at this point of time, but not seeing too much of a reaction, at least in terms of the names. Balrampur down almost 3%. EID Parry also has a similar fate today too. The other side though, there is some corporate action on Piramal Finance. They have launched a 2100 crore QIP. Stocks almost down 1.5% almost at this point of time, but there have been some good order wins as well for Pace, Digitech as well as GPT Infra. Both those counters not seeing too much of moves, but that's the state of the market that we are in at this point of time. Also is Afcon's Infra. There was a 336 crore arbitral order win that the company has gotten, and hence stocks up almost 2.8% right now. Also is up is Entero Healthcare. Now 3P India Equity Fund, which is of course led by Prashant Jain, erstwhile the big fund manager of HDFC, has actually bought some stake into the company, and hence you're seeing a runway move of almost 6 to 7% on a day. We're not seeing too much happen, and hence continue to have this counter in focus too. Also in focus is Skims. Now the hospital chain has actually expanded its Hyderabad presence more now. Stocks in the green. We spoke to the management just in the previous show as well. And the other couple of last counters are on the fertilizer side of things. Now Russia has assured fertilizer supplies continue to be strong and proper at this point of time, and hence both NFL and FACT are counters that are continuing to be in focus right now. But Sharad, very good afternoon to you as well. What are some of the counters that you are tracking today as part of your rapid fire round?
Yes, good afternoon, Puneet. We have Sundar Kevat with us. Good afternoon, Sundar. It's always a pleasure to have you with us at the NDTV Profit. Let me start rapid fire, and the stock which everybody is talking about based on the OFS is Hind Copper. A big sell-off happening in this counter. Good time to average up, or do you think there is more selling pressure ahead also going ahead? Because today is the first day for the non-retail in the OFS. Sundar?
Yeah, I mean, if you look at the counter on daily chart, the stock is trading into a very broad range of 590 to 444 levels. Now, my sense technically over here is that the stock could witness some more profit booking and we could see some more correction coming in. I mean, if you look at the 20-day moving average, the stock has taken out that moving average, which is placed at 533 levels. So I would not be surprised, Prashant, to see this counter trading at 469 and perhaps let's say 440 levels. So I don't think so. It's a good idea to average out the counter over here. Yes, if it takes a support at 444 level, then in that case, yes, we could add out some counters.
And Sundar, what will be the technical levels for Kim's important announcement coming in, and stock is largely flattish, not major reaction coming in. Is there a consolidation at play here, or do you think there can be a trade on the other side?
Yeah, I mean, if you look at Kim's, Prashant, I would definitely look out the broader term. Like if you see the stock has been consistently performing and doing well, the stock has witnessed a strong upward momentum from 580 levels, and the stock has witnessed a high of around 858 level. Now, recently the stock has witnessed a kind of correction, and technically it has hit a kind of lower highs and lower low structure and breaking out to important support level of 777 level. So I am technically observing that the stock would correct more till 725 level. And also, Prashant, if you look at the volumes over there, the volumes are pretty much high when the prices are falling. So yes, definitely the stock could witness some kind of profit bookings over here. So it's not a good idea to add over here.
Right, and Sundar, talking about profit booking, sugar stocks are seeing a good profit booking coming in after the commentary of ISMA, especially post-market as this was announced. But do you think the rally in the sugar stocks, the tactical bet as people call it in August, is it over? Good time to profit book entirely or stay put also a little bit and take some part out of the profits?
Well, I would say we have to wait for more technical confirmation to get into that. We witness some profit booking or not. Now, if you look at counters like let's say EID Perry, now the stock has witnessed a strong jump up from 700 levels and it has made a high of around 865 levels. Now, in recent time, the stock has witnessed strong resistance at 200-day moving average, but again, the stock has not confirmed that the stock could go down, right? Technically, so I wouldn't say the stock we should book some profit over there. Yes, if the stock price closes with the 20-day moving average, which is placed at 790, then in that case, I would recommend the audience to book your profit. Otherwise, it's a whole counter for me.
Hold counter coming in for most of the sugar stocks, but fertilizer stocks, they have started rallying, and this is first time we are seeing a great momentum in stocks such as RCF, FAC, Madras Fertilizers, and even private names. Do you think this will sustain? Especially this is the first day of the rally, and if yes, which fertilizer stock will have the best risk-reward ratio right now?
Yeah, I would say the rally would sustain. Now, if you look at RCF, now the stock has taken a strong support at 120 level, and today we have seen a volume of around 14 million, right? And the stock is just taking a very strong support. So I would say the counter could reach till 134 level, and if that level is if that level is also taken out, then in that case, I would not be surprised the counter to see trading at 150 level, which is the January month's high, right? And also talking about some chemical space, interestingly, I also like Deepak Fertilizer.
Okay, Deepak Fertilizers. Okay.
Yeah.
Please go ahead with the levels. Yeah.
Yeah, if you look at a counter, the stock has witnessed a kind of sideways momentum from its all-time high. Now, if you closely watch out to the volumes over there, the prices have declined, but the volumes have not declined. So I would say, the stock could witness a strong support at 1410 level, and we could see some bounce back coming into this counter, which could lead this counter to at around 680 level. So this is a counter which I wanted to pitch up.
All right, and your views on the FMCG pack also. We'll be coming up with an analysis on that. But FMCG stocks, is there any good risk-reward ratio here, or do you think more fall can happen here?
See, I would first go over with the index level of FMCG. Now, FMCG, the index is currently consolidating at 47,350 level, and infinity is near to support level, right? So there is a higher probability that the index could witness some bounce back coming into it. Now, the stock which I like in FMCG is Britannia. If you look at the counter on daily charts, I mean, the stock has taken a support of around 500 and 290 levels. Now, interestingly, one technical parameter over here is a 50-day moving average. So I would place a conditional buy over here. Like if the stock price closes above the 50-day moving average, which is placed at 5,393, then in that case, I would not be surprised to see this counter testing a 200-day moving average in short run, which is at 5,671. So yes, in FMCG, I like this counter. And the second counter which I like in FMCG is Nestle. Now, if you look at Nestle daily chart, the stock is witnessing a strong primary uptrend, right? So primary uptrend, and the stock has witnessed some kind of correction, which is very normal technically, right? And plus, technically, the stock is taking a strong support at 50-day moving average. So I think so this is a counter which you can have a look at, the target of around 1550. And at higher side, if anybody wants to target, let's say 6 to 8 months, then in that case, the target will be around 635 levels.
And Afcon Infra, if you get that stock on the screen, they have won an arbitral award also. Stock is doing well, it's up 3% odd, but do you think there is a momentum in this counter?
Yeah, see, I would like to narrate the stock for that, what exactly the stock has witnessed from past couple of months. Like if you see the first April ka low, the stock has witnessed a strong rally from 685 level and made a high of around 1637 level, right? Now, interestingly, the stock has witnessed some kind of small pullbacks from the mid-July session, but again, the stock has witnessed a strong upward movement. So the primary trend of this counter remains positive, and any dip at, let's say, around 1530 level, or let's say a 20-day moving average, which is at 1485, is a good level to accumulate, and we would expect some higher targets over here.
Sundar, Entero Healthcare is the stock, and Prashant Jain promoted 3P India Equity Fund has taken position in this counter. Stock is up 7%. More follow buying is expected. Even the volumes are strong. Any important levels to track, especially on the weekly or the monthly charts?
Yeah, I would first go out with the daily chart. Now, in daily chart, the stock has witnessed a strong upward movement. We cannot ignore that momentum, right? And if you talk about the current levels for entry, then I would say if anybody enters over here, then the risk to reward ratio will not be favored. Right? Let's talk pretty much sense. Like if you enter over here, the stop loss will be at around 1384, right? Which is a big stop loss compared to the current market price. So around 15% the stop loss is not justified over here, right? So I would say any dip at, let's say, around 1526 or let's say 1470 level is a good level to accumulate. But what if any of your audience have had some kind of buy over here? So in that case, my view would be hold on to this counter, and we can expect a higher target of around 1763 on immediate basis. If that level is taken out, then as per the Fibonacci extension, the next target is around 2000 levels.
Right, and the last stock, of course, for last 2 days, we are seeing a good strength in the IT stocks. Let's pick up TCS for that. Any kind of a trade can be made here. It's slightly dipping right now, but the index itself was showing strength earlier at least. But Sundar, any trade to be made here for TCS?
I would like to go out with the basic of technical analysis. Like the stock is pretty much into trading into a very broad range of 2470 to 2016 level, right? And from there itself, the stock is witnessing some choppy sessions over it. So I would say, the stock could be placed on the radar, but at current levels, I'm not comfortable in recommending a buy over there. Yes, if it crosses 2470 level, that would give you a fresh breakout. In that case, we could expect some higher target of around 2762 level, which is the resistance of February month.
Right, IT coming up with larger deals also. But that's the end of the rapid fire round. Over to you, Puneet. I'm sure there's a brokerage waiting for the IT segment as well from UBS.
Well, most certainly, and Sundar, wait on, because a very interesting part of what UBS has mentioned actually on the space. They feel that part of the move that we are actually seeing on the Nifty IT is also led by the global factors as well, because we've seen a rotation out of the semiconductor stocks into these IT companies globally as well, and hence they feel that investors are beginning to reassess the bearish case on IT services as well. That's one of the important points that I'm making in this report, because while there are several structural concerns that are being challenged, there are some merits to this particular argument, is what UBS says. They've also mentioned specifically that there is evidence that is required for a broad-based bullish stance at this point of time in the IT space, and hence it's important to be selective. They are also mentioning companies that score well on execution, of course, will have a better momentum. But very interestingly, they've graded 3 stocks on their radar. One is Tech Mahindra as well. The other one is Coforge, and the third one is Emphasis. Those are the 3 upgrades that they have in this particular report. They've also downgraded actually Persistent, as well as continue to being under pressure on HCL Tech. Those 2 counters for them, they feel could be under pressure going forward, while they are maintaining a neutral rating and a buy rating on TCS as well as Infosys, and a neutral rating yet again on Wipro. So they continue to mention that you have to be stock specific and very selective, but continue to see some good moves on Coforge compared to Persistent at this point of time, and also on Tech Mahindra, and very interestingly on Emphasis too. But, I want to ask you this question as well, Sundar, that largely you mentioned about TCS as well, but between Coforge as well as Persistent, there's a clear, winner here for UBS, which is on Coforge. Do you second that view? What's your view on the chart now?
See, honestly speaking, I am a trend following kind of technical analyst and I like to follow trend a lot, right? And if you look at the daily chart of Coforge, the stock has witnessed a strong upward momentum and the stock is, not fizzling out to its momentum. Also, if you look at the recent returns which the stock has generated from 18th March to till date, the stock has witnessed around 87% return, right? Which is not a normal return for this kind of counter. So I would say, Coforge is a clear-cut winner compared to Persistent, but I would not say that Persistent it is bearish technically, but Persistence may, we could play some kind of conditional bets over there. Like if you see Persistence daily chart, the stock has witnessed a resistance breakout of around 5,620 levels, but the stock is just, going sideways near to the resistance, which is a strong point over here. So I would like to place a buy recommendation over here once the stock price closes above 5,730 levels. If this price has been taken on a daily close basis, then in that case there could be a clear-cut breakout confirmation and we could witness some upside till the resistance of around 6,414 levels.
Right. Thanks a lot for that, Sundar. But the FMCG pack, that is where concerns are coming in. Of course, be it input pricing, or even you could say the management changes are happening. A lot of moving factors are there. In fact, if you talk about the FMCG index, this is one of the worst months since the year 2004. Of course, there has been some gainers, especially in the alcobev industry, but the valuations become quite cheap. And to understand more about the FMCG pack, and is there any valuation at play or what's stressing this entire industry, we are having Abneesh with us. So good afternoon, Abneesh. It's always a pleasure to have you with us. FMCG, lot of, you could say headwinds are coming. How do you see that?
Yeah, hi, good afternoon. So yes, we are positive on Q2 results for most of the names. So yes, you're right. Last few weeks and months, except 4-5 names in that pack which have done quite well. Most of the other names have seen quite muted stock performance. So 4-5 stocks which have done quite well, in fact, are our top buy calls also. So those are essentially Marico, Nestle, Pidilite, Radico Khaitan. These 4 stocks have done quite well and not far away from their all-time highs and trading at premium multiple. So what we have seen is 3 things. Yes, market is worried on the El Nino. So currently as we speak, El Nino, the deficit is around 11%, but clearly rains in the near term again are picking up as per the latest cloud scenario. I think overall there will be a deficit, but what we have studied in the last 10 years, the correlation between the El Nino deficit in rains and volume slowdown, demand slowdown in FMCG is not great, either this year or the next year, because there are multiple things, right? If you see any state government which has elections, they offer 2,000, 3,000 rupees stimulus programs, plus definitely a lot of crop inflation is going to help. Currently, if you see the sugar inflation and the onion inflation, that will lead to a lot of the agri income also going up. So it is never so simple that, okay, it's a El Nino, then the demand goes bad. In fact, in Q2, my sense is most of the FMCG companies will continue to see slight acceleration in terms of sales growth, because in terms of pricing growth, slightly higher pricing growth will come through in Q2 versus Q1, because Q1 it was during the quarter the price hikes happened, while in Q2 it's there from the day one. In terms of volumes, again, if you see most companies are doing multi-year high volumes, I think broadly that will continue. So I think it's a case of El Nino. Second issue, most of the large caps, if you see across any sector, you take it, banks, in terms of real estate, IT, and any industrials, most of the large caps in fact have not done well. Conglomerates, most are trading at a multi-year low. I think that's true for FMCG also, because clearly what we are seeing is there is more of outperformance from the mid cap, small caps. Third will be of course crude oil, right? Currently as we speak, again because of the geopolitical issue, crude oil has gone up. Plus definitely some raw materials like sugar are going to impact some of the food companies like Britannia. So that's a genuine concern. Yes.
And Abneesh, what will be the silver lining here? You're stating that the Q2 numbers would be decent enough here, but let's just break it down into urban as well as rural consumptions and how things are coming out. There's more stability coming back in urban segment.
Yes, urban consumption, we are seeing a lot of good demand across the board. If I see QSR, clearly the recovery in Q1 was there for most of the companies, and outlook is also looking like next 2-3 quarters, we should expect that recovery to continue, because this was the first quarter. Paints, again, if you see, almost all companies saw strong double-digit sales growth. Alcobev, again, Radico Khaitans of the world saw very strong growth. They upgraded the guidance, and I can keep continuing. So urban is doing well. Rural currently is doing quite well. I don't think any company is saying that rural currently is a big challenge. Maybe 1 or 2 exceptions, but broader theme is rural is currently doing well. Question is in Q3, Q4, when the real impact of El Nino, because there's a lagged impact, right, always. Then what is the scenario? As I said, we have not seen last 10 years a big correlation. Currently, yes. So that's why if someone wants to bet on the El Nino impact, I think urban space will be better. So that's why we like Alcobev, we like paints also, we like QSR definitely, and restaurant brands Asia will be our top pick there. But generally QSR, we are expecting recovery.
Got it. Avnish, good afternoon. It's Puneet this side. And just a very quick question, because you mentioned some of the picks as well. You also mentioned that some counters that have done actually very well, Radico Khaitan, Nestle, Marico and United Spirits, and we showed that on screen as well. But do you feel that these winners are supposed to be ridden still from these current levels? Would you buy within these names as well? Or because we've also put together some data that the counters that are not done well, like GCPL, like Varun Beverages as well, they have the highest return potential according to Bloomberg. But you've seen some of the other key challenges for all those players, right? Either management change or competition. So how are you looking at further deployment of cash at this point of time within the space?
So 2 buckets, good question. On the 4-5 names which always do the highest growth in the respective segment, I would say that fresh allocation should not be done, because those are sitting at very high multiples. So you should ride out the Q2 growth, but not put fresh allocation. In terms of fresh allocation, I think some part can be definitely put in QSR, because this is the first quarter recovery, and Mrs. Bector's, which does the back-end manufacturing for many QSRs, they have really highlighted that this is a new trend, and generally in consumption, new trend continues for a year. So that's why 3 more quarters of QSR good performance should continue. Of course, we have to see what the regulator like FSAI or Tukaram, etc. are doing, because that can put some impact on the customer sentiment, right? If daily some kind of an issue is being found in restaurant, or this pizza outlet, that burger outlet, I will be watching that. But currently that seems to be more of a concentrated news rather than the pan-India news. So yes, from a stocks which have not done well, QSR could be one. QSR, if you see, still 3-year, they have not given any return, right? Yes, last 6 months. Apart from that, in FMCG, I think Colgate, that management change is done, plus numbers should be good. My sense is 15% plus sales growth is possible. Secondly, HUL, right? HUL, again, if I see, my sense is Q2 should be around 11 to 12% sales growth. Varun and GCPL, valuation comfort is high, but Q2, I don't expect a big recovery. There, we still have to wait it out.
Got it. Well, Avnish, I think in your 20 years of tracking the sector, I think this is the first time where there are new challenges, as you mentioned, the Tukaram Monday effect as well as the FSAI. But thank you so much for joining in today, giving us your view across a whole bunch of stocks and spaces. Well, we appreciate your inputs and you joining in to NDTV Profit as well. But viewers, out of time on this edition of the show, from Sharan, myself, everybody who put the show together, thanks so much for watching. Stay tuned, a lot more action on the other side.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
We are turning a page in Nepal's political economy on the bedrock of good governance and bold reforms. We want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
I'm Shashi Tharoor, and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for
Industrial Corporation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anviksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
Welcome to India's biggest grassroots innovation movement.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में, कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
They say morning shows the day. Markets often have other plans. By midday, the story can be very different. That's when the right insights helps you rethink the day. Trades, trends, the moves that matter. Join me, Nisha Poddar, for Markets at 12, your edge for every move.
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV.
Good afternoon, you're watching Lunchtime Trades with me, Shreyansi Singh, and this is the show that gets you a roundup in terms of everything that is happening in the world of commodities, news and updates on the top buzzers at this hour as well. all while you grab lunch. But before we do that, let's quickly take a look at what the markets are up to. And it's not great sentiment that you're looking at, whether you talk about Nifty 50 or Sensex. As you can see on your screens, Nifty 50 about 70 odd points down. Even when you talk about Sensex, that cut is actually much deeper there. And you're seeing some underperformance also coming in when you talk about broader market indices. Sensex about 150 odd points down. When you talk about the sectoral picture, also very sharply tilted in the favor of red. So it's actually IT, energy, metal, auto, as well as oil and gas. On the back foot, what's holding resilient right now is perhaps PSU banks and pharma, and that's where you're seeing some pockets of resilience. But on the flip side, something like a Hind Copper is down about 7% and you do have quite a lot of news flow coming in as far as this particular counter is concerned on the back of the OFS, and that seems to have weighed on this particular counter. And when you talk about some of the other stocks from within the Nifty 50 as well, it's some of your IT names that are taking quite the beating right now, down anywhere between 1.5 to about 2%. Now, moving on, let's also quickly take a look at oil prices as well that are posting declines at the moment, but that's not the kind of picture that you've had. So you're looking at some of those elevated levels as far as oil is concerned. So about $92 a barrel thereabout for Brent, and WTI close to $85 a barrel as well. That said and done, let's also get you some more insights in terms of how you should be reading between the lines when it comes to the prices. And Dinesh Somani, founder of Pro IntelliTrade Services, joins us on the show right now. Mr. Somani, a very good afternoon and thank you so much for taking time. Pleasure as always having you on the show, but really wanted to try and understand what's been happening with oil prices right now, because on one hand, you do have that rhetoric really continuing when you talk about Tehran and Washington, and there's no diplomacy really in sight when you talk about some of their commentary. So given all of that, prices should be, well supported at some of those levels. Is that how you're reading into it? Because the market seems to have a different opinion.
Now, more or less, what we observe is that the number of tweets, the number of messages, the number of news, there are declines with respect to crude oil prices, and the focus has been shifting to the bond market right now. So the volatility has shrunk right now. Earlier, we used to see on Monday or a weekday, there is a gap up or a gap down opening of near to 3 to 4%. Now, it has been declined to 1.5%. We have seen the Brent crude oil pricing moving beyond $94, $95, then they are back to $91. So as of now, I think the geopolitical tensions are being discounted by the crude oil prices. Despite the Strait of Hormuz, uncertainty continues, but the prices are not that at a premium rate, nor they are below the $80 mark as far as WTI crude is concerned. So overall, if I look at the prices, the broad range which I could see for the next 1 month is $77 on the downside for WTI crude and $88 upside for the WTI crude. That's the range which I like to see.
No, absolutely, and that makes a lot of sense in terms of the kind of range that you should be keeping in mind as well. But given if there is an escalation of sorts, are you then penciling in close to $120 a barrel as we've seen before, or do you think that that's off the table really?
I don't even expect to move beyond $100.
Okay.
That's what I expect. So I think news are being discounted, geopolitical tensions are being discounted, and prices are moving in line with the demand and supply, where the supply would increase further, and we may expect prices to move below $80 very soon.
No, absolutely, and that makes a lot of sense in terms of how you should be looking at prices right now. The markets do seem in alignment with everything that you've said thus far, but in terms of the tempering of the sentiment as well when it comes to oil prices, I just wanted to know if you think that this is because of the alternate routes that have been figured out since the previous time when prices really rose above $120 or $100 for that matter. You didn't have those routes in place, right?
Yeah, absolutely. It's more than 180 days. The geopolitical tensions have risen and the Strait of Hormuz is almost closed and open now and then. So people would be, and the countries would be definitely looking for alternate routes. And I think if the transaction to the Strait of Hormuz will reduce, definitely they'll find some alternate route for the flow of crude oil to continue. So I think that could be one of the reasons, and that is the major reason.
Right, so some amount of fatigue that you're really seeing when it comes to some of the news updates as well and the alternate routes, which is why you're seeing prices also be slightly more range bound than we've seen earlier when it comes to even escalations and the reaction resultant. Let's also quickly take a look at gold as well, Mr. Somani, because it's holding above the 200-day moving average. What do you think about the momentum of prices going forward?
It's already at the 3 months high. We have seen a low of $39.30. Now there is a sharp rebound. Today we have already witnessed a $4,700 mark. So a close to 15% rally in a very quick time that indicates that strong build-up in gold. The central banks, especially the Chinese bank, they are buying ETFs are moving up again. And I think the dollar index has declined from 101.5 to 99 levels. So overall things are very much in place and very much positive for gold as far as gold is concerned. So overall, I think now 45.10 should act as a very good and a crucial support. Upside, we may expect $5,100 by Diwali this year.
Wow, that's quite the forecast coming in, Mr. Somani. But also just wanted to try and understand what you think about fresh buys as well, because this is the time for festive season buying as well. What is the kind of advice that you have in store for those investors?
Definitely. I mean, earlier also when I suggested it was consolidating between the 39.50 level and the 41.20 level. The moment the 41.20 level got crossed, they got a trigger and prices move on to $4,700. So a $200 dip is quite possible from here because since prices escalated almost 15%, 2-3% dip is almost advisable. If that comes in, that would be a very good for market and very good for the investors to invest in.
Alright then, so if you've missed the previous opportunity to hear out Mr. Somani, this is your time and take a look at those levels as well. Mr. Somani, lastly, just quickly wanted to try and highlight copper as well because you've seen quite the interesting momentum right now. The rally seems to have screeched to a little bit of a halt right now. But do you expect that momentum to also come back when it comes to copper? Because Citi sure believes that it will.
Yes, definitely. Aluminium performed earlier, then zinc moved on. Now the next one is copper in line. I mean, as far as MCX levels are concerned, 1350 is a very good and a crucial support. Prices have bounced back from these levels multiple times. They are resisting around 1400 level mark. The moment copper closes above 1400 level, we may expect 1414, 1467 very soon. So this is a trigger that is being left out to be built up. I think aluminum could be the next, copper could be the next rally in coming month.
Right, no, absolutely. And thank you so much for joining us with all of those insights when it comes to oil, gold, as well as copper. So watch out for copper as well when it comes to base metals. But with that, it's time for a very quick break. More news and updates on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी।
अंबा शक्ति प्लांट की वर्ल्ड रेनाउंड टेक्नोलॉजी देती है स्टील को ज्यादा ताकत हर बार। अंबा शक्ति SDTMT।
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ।
3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored. Of holding the line when it mattered most. Times change, our purpose doesn't. NDTV 24/7 is now NDTV when it really matters.
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रासरूट इनोवेटर दिखेंगे वंदे भारतम में। Coming soon on NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very, very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
I'll ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
The news, Ayush. Since when do we do scripts? Fair point. Picture this. The biggest stage. Floodlights. 4K. The works. Where's the hook? There's going to be celebrities and guaranteed eyeballs. Where's the hook? Think about this. Front page advertisements and hoardings. Bro, where's the hook? Cross-platform, digital first, virality. Without a hook, no way. The message is clear. It's 2026. You gotta be real in a world of reels. You gotta be original in a world where everything seems generated. That's it. That's what we're looking for. The best campaigns, the hottest trends, the smartest brand moves on our new show. But wait, what do we call it? The hook.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapid
Welcome back. Thank you so much for staying tuned in. Well, from the mega LIC OFS to the latest Hindustan Copper stake sale, the government has hit the ground running on disinvestment with 52,000 crore plus already mobilized. Are more big ticket OFS deals in the pipeline? And is FY27's target headed for an overshoot? Earlier today, we spoke to Arunish Chawla, DIPAM secretary as well. Let's go across and listen into a slice of that very important conversation.
Government has hit the ground running on disinvestment with 52,000 crore rupees already mobilized. We're talking about it now with Mr. Arunish Chawla, the DIPAM secretary, speaking exclusively with us on NDTV Profit. Mr. Chawla, thank you so much for your time. And I must say that the year has already started with a bang. Tell us a bit about Hindustan Copper, because the biggest being LIC, of course. How do you see the momentum from here, and what's your reading on the expectations around the Hindustan Copper OFS?
Thank you very much. Team DIPAM has hit the ground running, and everyone has worked very hard to make market operations a success. And this is in line with Prime Minister's vision of sharing the national wealth with, ordinary investors, minority stakeholders, and citizens of India. And we are making sure that they get a good deal, and they also make reasonable profits. And the public enterprises stand ground as beacons of fairness in the markets, in terms of their sustained investment plans, sustained growth, and fair dividends to the investors. In light of that, government has announced an offer for sale for Hindustan Copper today. The offer will be on the markets today and tomorrow. We will be offering 5.8 crore shares under this offer. And as you can see, the market prices have held up. And the response has started. People have started coming in. Today, the institutional investors will bid. And tomorrow, we will allow the retail investors to bid. We have kept aside 10% exclusively for retail. And we would encourage small investors that this is an opportunity for you, and you must make the most of it. Hindustan Copper is a prize stock. It's It's a valuable stock, and this may be the last OFS, because we will now bring it down to 60% and then hold it there for its capital requirements.
Okay.
But this is a great opportunity for investors, and particularly the retail investors should not miss this opportunity. Sorry.
No, please complete your point, sir, and then I'll come in.
Okay, and Hindustan Copper, has good futuristic investment plans. It produces copper, which is valuable for our economy, for our supply chains, and we should not be driven by short-term quarterly profits, but we should look at what their medium-term performance is and what their long-term vision is. And if you see the market analysts and the feedback, this is a stock which is forecast to go upwards. I will leave the viewers with that information and encourage everyone to make the best of this opportunity. Over to you.
Yes, Mr. Chawla. No, I wanted to underline that you're saying this could be the last OFS for a while in Hindustan Copper. Just want to understand that bit a little more. And also, what are the kind of expectations that you have penciled in? Having said that, the pitch that you've talked about is very apt. This is a stock and this is a company that the street is very interested in.
Yes, for those who know the market and who track market history, we've already had 6 OFS in Hindustan Copper over the last 10 years since 2015, and this is the big one because we are offering 6% on block, and with this we would have completed the journey. We listed it initially, when it was 100% government owned. And now over the last 10 years, we've now come down to 66, and with this will come down to 60. And we're leaving a little margin for the company to mobilize capital on the markets, to be able to invest it in mining that is modern and technology intensive, and be able to use that margin for its capital investment and its sustained growth future. And that is what I mean. And this essentially then is the 7th offer for sale as far as Hindustan Copper is concerned. But this one is for the investors, this is for the small investors, this is on the market, and it is on the money, so don't miss it.
Okay, that's great. Just wanted to understand which are the other large OFS transactions that you have in the pipeline, whatever you can share, sir, with us. Is it, for example, BHEL, one of those which could come in? Because 9 have been done. How many more?
Good question. Good habits once built up last. I would never even inadvertently reveal which one next. But yes, good habits last. And investors have reposed their faith in us. You saw what LIC OFS, the response it got. It was overwhelming, unbelievable. And we will continue to be with the investors, and we will continue to keep coming with market offers, and we believe, and we have evidence to show this, that public stocks in portfolios, whether it's a mutual fund or a growth option, or you build a portfolio yourself.
Then there you go. So that's the one coming in from the Deepam secretary as well. But let's also move on and talk about Sunshine Pictures that made a modest sort of market debut listing at a 10% premium. In fact, you do have Rhythm House caught up with Vipul Shah, chairman and MD of Sunshine Pictures, to discuss the use of IPO proceeds and lots more. Let's go across and listen in.
Sir, I want to start by asking you that, the company has listed at a premium and it also had 100 times a subscription as well overall. Now, the revenue of the company has shown a degrowth from past 2 years, and even in FY26, there was a bit of degrowth of about 28%. How will you turn this around? What are the plans on this?
See, in film industry, if you're going to look at the top line, it's always going to be misguiding. You will have to look at the bottom line. In bottom line, we have grown in 26 from 25. There are exceptional years that we have, like we had in 23 Kerala Story 1. which was an exceptional year. So there was an exceptional growth in that year. So we've not degrown, but there is just that one exceptional year which has made our company that particular year way higher than the other years. And we wish to have more such projects and years, because film industry and film business is, is about people's love for your work. So if they love you more, it's better.
Absolutely. Now, as you also said, that PAT has definitely grown in the past year by about 16%, and even the EBITDA margins and the EBITDA has shown a healthy growth. But the operating cash flow has been a negative of about 33 crores. How is this? How do you look at this, and why this mismatch?
It's not a mismatch. What happens is that there are certain payments that come in a due course of time, and the film, our film released on 27th of Feb, Kerala Story 2, and the telecast on satellite and OTT and all happens 8 weeks after, and satellite happens 4 months later. So some of those amounts are always pending in that particular quarter. They are recovered. None of the company doesn't have a single bad date. We have never lost any money. Whatever is outstanding, we've always recovered. But that's a cycle of our business, and we can't do anything about it. For example, we are making a film with Mr. Akshay Kumar today. We are shooting for a film called Samuk. If we sell any rights today, we will get some advances. But
Alright, then that's all the time that we have on the show for now. Thank you so much for tuning in.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Welcome to India's biggest grassroots innovation movement.
वंदे भारतम भारतम वंदे भारतम।
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ECG मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our cabinet.
are deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTP World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
A world of questions. Ideas that challenge the ordinary. Conversations that connect countries and cultures. Where different worlds find common ground. NDTV World brings Nepal's ideas to the world. NDTV Anveksha, Ideas Across Borders. The Nepal Dialogue. 27th August, Kathmandu, Nepal. 3 decades of watching the world change. Of asking the questions that couldn't wait. Of telling the stories that couldn't be ignored.
Good afternoon, you're watching Small Cap Bazaars on NDTV Profit with me, Somit Sarkar. In the next half an hour, we'll take you through the relevant small cap stocks that have been buzzing in trade, either on the back of price or volumes. But before that, let's have a look at the market. The Nifty, it's down nearly 90 odd points in trade. Not much of an movement or excitement that we are seeing in the market in trade today, given the fact that it's also an expiry day. The Nifty Bank Index, that's down around 200 odd points in trade. Tracking similarly with the Nifty Bank. And when you look at the sectoral indices, it's only Nifty Media, Nifty PSU Bank and Nifty Pharma which are managing to hold on to green, up around anywhere just 0.1 to 0.3% odd in trade. So not much of an excitement there as well. On the losing side, we have Nifty IT which is down around 0.9%, followed by Nifty Energy, Nifty Metal and Nifty PSU Index down anywhere between 0.6 to 0.7% in trade. Among small cap stocks, if you look at Genesis International, that's hit an upper sucker of 20%, followed by Federal Mogul up around 13 odd percent, Sigachi Industries up around 11% in trade, and then there is Oriental Rail, Apollo Pipes which are up close to around 8% on the gaining side. Now on the losing side, if you look at, it's Virat Industries down around 9%, Chronox Lab down around 8.5%. The stock was on an uptrend earlier after the deal that was announced, but right now it has been falling around 8.5% in trade. Nahar Industrial, Quadrant Future, All Cargo Terminal down anywhere close to 7% in trade. But a new company that will be listing on the exchanges and would fall on in the small cap category, ESDS Software. Now, the IPO will open on August 20th and the price band that the management has set or the company has set is at around 408 to 429. To give us more details on the company, we are joined by Piyush Somani, the Managing Director and Chairman of ESDS Software. So firstly, to start off with, on the usage of funds, you have mentioned in your RHP that you will utilize the funds to purchase and install cloud computing and other equipments that are relevant for data centers. But how will the same help the company, if you could take us through that?
Yeah, so out of the 720 crores IPO proceeds, we are looking to invest 576 crores into GPUs and some servers, CPU servers and data center MEP equipments. So close to some 600-700 GPUs will be brought and server capacity would be brought, and data centers also few megawatts of data center capacity is what we are planning to add to run this GPUs and CPU infrastructure. So we already have a pipeline, confirmed orders from the customers, so for which we are looking to deploy this capex.
So what is the kind of incremental revenue that we could see post this capital expenditure has been deployed?
Yeah, so what we see from the international partners and competitors all over the world, and also a couple of others which are there in India, they generally make 85% EBITDA margin and 45% ROCE margin and 40% PAT margin on this kind of deployment. So our aspiration would be to get closer to their numbers.
But sir, how much would be the incremental revenue?
So, as I mentioned, that 85% EBITDA margin. So, generally people make close to 0.8x or 0.9x of the capex that is deployed per year, and they manage to generate 85% EBITDA margin from this.
Okay, if you look at your FY26 PAT, that has more than doubled to 121 crore. PAT margins have expanded to 26%. How much of this margin expansion is structural, and what should investors consider as a sustainable PAT and EBITDA margin rate, say, over the next couple of years?
So, from the models that I am seeing of all our partners in India and outside India, and also, so people are targeting 40% PAT margins, 40. So, we should also be aspiring to reach similar numbers.
Right, and one new overseas enterprises that you customer that you onboarded contributes around 75 crore. That is nearly 16% of your FY26 revenue. Is this revenue recurring? What is the contract tenure? If you could give us more details on this front, and what kind of revenue should we expect from this customer in FY27 and FY28 as well?
So the revenues are recurring. What we are earning from our international customers will be, so the entire business model is focused on earning recurring revenues. And for some customers, we will be designing and deploying so for some customers, we will be only doing the design of the GPU infrastructure or complete clusters. And majority of the customers now from here onwards, we will be delivering the entire cluster and year on year managing it and charging monthly subscription fees to them. So GPUs are globally, if you will see, people are earning per hour per GPU revenue. Those who give pure GPU on a service model, or those who give a complete AI factory on a service model, they charge an hourly rate. Whether you use the GPU or not, you have to pay an hourly rate for all the GPUs which are provided to you. So that's what we are also aspiring to target.
Now, if you look at one of the segments of your business, that is managed service revenue, that jumped nearly 157% in FY26, while the performance of the other two segments, that were quite a bit muted. But what is your expected growth trajectory for each of these three businesses in FY27 and in FY28 as well?
So last year we did not do much capex. We did not anticipate that this is the kind of growth trajectory we will come across, or the partner ecosystem that we will build, we will see this kind of. So we were very conservative until last year. So that's why we were only helping our customers to with the design part of it, solutioning part of it, and helping them to deploy it on someone else's infrastructure. But now moving forward, we are very confident that we can do it ourselves. So we can lease the GPUs from someone, we can lease a data center from someone, we can put our Swaraj cloud on top of the entire infrastructure and give everything as a service to our customers.
Right, the revenue growth CAGR was around 28%, while the EBIT and the PAT grew at a much higher rate over FY24 to FY26. But what I wanted to understand is that, is there more operating leverage left, and how should one see the earnings growth going forward?
There is quite a bigger opportunity because of, so if you look at the speed at which 147 neo cloud companies are growing all over the world. So this 147 neo cloud companies, some of them, like one of them, for an example, Nscale in UK, born last year. The first contract that they did was in September last year. And today they have contracted 3 gigawatts in entire Europe region, and which is double that of India. Now Sharon AI, the first contract they did with us was on in the April of this year, and today they have 200,000 GPUs which they have contracted to their customers. So that is the kind of scale which everyone is experiencing because of the demand and supply gap. The reason the CPU, GPU prices have gone up like 5 times, 8 times in the last 6 months is because the demand supply gap is there. Next 5 years, the demand supply gap doesn't seem to be coming anywhere closer to what exactly the demand is. So we now have that confidence looking at the limited supply of semiconductors all over the world. So we have to make the maximum out of this opportunity in the next 5 years. So we want to reach similar numbers which the competition is able to achieve: 80-85% EBITDA margin, 45% ROCE margin, 40% plus PAT margin. Can we do better than that? We will definitely aspire to do better than that.
Now, if you look at your top 50 customers, they contribute roughly around 74% of revenue. But what percentage of revenue comes from the top 5 and the top 10 customers? And how is the management looking to reduce the customer concentration here?
So until last financial year, our top 25% customers contributed 50% of our revenue, and top 100 customers contributed 85% of our revenue. So we hope to see a similar trend as things will settle down couple of years from now. The similar ratios would be achieved, but because the new customers who are coming now, the contracts are much larger from these new customers. So obviously there will be a balance gap between the top 2 customers, top 1, 2, 3 customers and the other customers. But we will, over the period of next 3, 4 years, 5 years, things will stabilize, and again we will achieve similar ratios in future.
And lastly, sir, the government business that still contributes around 27% of the top line. What proportion is recurring? How much of is tender based? What is the current government order pipeline, and how do margins and receivable days compare when we see it with the private customers here?
So, yeah, correct. 27% of our revenue comes from government. This is 100% recurring revenue. And this is majorly through our partnerships, our partnership with Software Technology Parks of India, or our partnership with SIDBI. So, we earn this revenue from them, and 100% recurring, and there is an incremental growth happening because their workloads are also increasing. We don't see any major issue with receivables over there because the switch remains in our hand. So that's why the customers have to pay. So we have managed to maintain around 78 days of receivable cycle, and hoping to be, as international pipeline grows and also domestic pipeline grows simultaneously, aspiration is to keep this under 45 days.
Thank you, sir. Thank you for joining us and giving us the way forward for ESDS software. Shifting focus to NITCO, the company that has announced a big transaction that could lead to a big cash flow coming into the company. Let's get in Vivek Talwar, the chairman and managing director of NITCO. Firstly, sir, to start off with, can you break down the transaction structure for us and explain exactly what NITCO is acquiring or transferring here, and what is the kind of consideration that NITCO will get?
So over a lifetime, we have built up a very large land bank in the MMRDA. And this is a 40-acre parcel which has a sea view. It's close to the sea, where we have done a deal with House of Abhinandan Lodha, and we get a revenue share between 30 to 35% depending on what they are building. So the top line would be around 4,000 crores, and we should be approximately 1,300 to 1,500 crores of top line, and we expect the project to get completed over a 5-year period, so our money will come in over that period.
Okay, so this land belongs to NITCO Realties, right?
It belongs to NITCO Realties, which is wholly owned by NITCO, so it will get consolidated with NITCO.
And sir, just to clarify and just to understand here, your name also appears in the MOU. Why is that so?
When we bought lands at that time, it was difficult to buy in a corporate name. So I had to buy it in my name, representing the company. But land all belongs to the company.
Okay, great. Now, just wanted to understand. So this 3,000 to 4,000 crore is an approximate number. This could go well above the estimate as well?
So, I mean, I think this is a good estimate of 4,000 crores, and we'll get about 1,500 crores. I don't know how the prices move, if it goes up, then we can go up a little bit as well. But this is, I think, a good estimate that we have.
Okay. And obviously the cash flow will not be, it could be lumps, it could be a bit lumpy as well, right? Just for our viewers, I just wanted this clarification that the cash flow could be lumpy. In 1 year, you could get more amount. In 1 year, you could, and another year, the amount received from this deal could be less also. But overall, over the 5 years, you will get around 1400 crore. Is that correct?
Correct. So we've received the token of 9 crores, and as soon as we sign the definitive documents, we'll get a total of 45 crores. And then as they keep building and selling, we'll keep getting money. So I'm not sure whether it would be lumpy, but as money keeps on coming in, it'll go into escrow, and plus it'll get released to us. And so over a period of time, we'll get it. But you're right, maybe some part of it could come towards the end of the project.
And once the funds start coming into NITCO Limited, just wanted to understand, how are you planning to deploy this cash? Will you be giving it back to the shareholders? Will you be investing in your other businesses or in some other real estate project? Could you give us some clarity on that front?
So we still have a lot of land available, which we are cashing out. We had done a deal earlier with Total Environment, that is a Bangalore developer. We have given them, earlier we had signed a joint development agreement with them of 58 acres. That land has now gone up a little bit, and that we should be signing a revised agreement with them. So we have a lot of land, even besides these 2 parcels in Alibag. That should give us substantial amount of money. But we will take the call if we can do some buyback of shares so that money goes back to the shareholders, or of course it'll be deployed to grow the core business, which is and always remain our core business. And when we have some liquidity in excess, we will buy more land and again keep giving it to builders.
So not yet finalized.
Sorry?
So not yet finalized. How will you utilize the cash that comes in?
I mean, you get cash. We've been through such a difficult time in the past that now having a cash is a good problem to have.
Right, sir. Right. Now, talking about your core business, sir, on the tile segment, in the recent past, have you faced issues related to demand, related to gas supply, and how are things improving now?
So we run an asset-light model, and so we are doing only contract manufacturing, and we hope to continue to do that. And we did have a problem during that period of 1 or 2 months where the supplies had gone down. But at the same time, when the gas supplies had stopped completely, the factories had to stop from the ones who we were sourcing from, all our stock got sold. In fact, this was a good thing for the entire industry. All our stock nearly got cleaned out. But things have bounced back, and now it's been a couple of months when we are back to normal and back to growth.
The demand environment, sir, is it picking up?
It's great. I mean, builders building all over the country. Demand has been great. Retail sales have been good. We have a run rate of about 50 crores a month plus of sales, and our aim is to try and keep growing at about 3%, 4% month on month, because we have a low base and we have a lot of catching up to do, so which is what we are doing right now.
Lastly, sir, just wanted to understand, I believe recently you did announce an order, marble order from Prestige Estates of around 66.65. Any such similar orders that you're expecting to come in? What is the order book here? Any details on that front if you could share with us, sir?
So our large accounts, current orders in hand are between 200 to 250 crores for this year. And the retail, we are averaging about 35 crores a month run rate. And this will keep going up because all developers are doing well, and that's what's going to be happening.
So thank you for joining us and giving us more details on what this deal is and what is the way forward for NITCO. It was great speaking to you, sir. Let's also welcome in our fundamental guest, Girish Sodani, Vice President of Choice India. Girish, you heard the management. When it comes to the core business, they are seeing growth going forward, and this real estate business, more cash coming in, they might do more buybacks, as they might do buybacks going forward to reward the shareholders. How are you looking at this counter compared to other such peers?
So, if we talk about particularly this counter itself, I don't think so that this is the right time to just discuss on that what the execution is going to be in the terms of deals, because I think this is a long-term perspective. At least we have to check it out for the next 3 to 4 quarters how the management.
Right. We'll get back with Girish view on Netco, but let's slip into a short break and we'll be back with more news on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो पतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Under Shashi Tharoor and beyond statecraft and former treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy and people-to-people bonds.
I look forward to sharing our vision for industrial cooperation at NDTV World a week share.
Seamless trade and strategic cross-border investments are real drivers of modern growth.
Understanding the past and present is the key to unlocking the future in India-Nepal tie.
Join me at NDTV World Anveksha, Ideas Across Border in Kathmandu on August 27th as we explore Nepal's role in changing the world. Don't miss it.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
Man lo.
Absolutely no. I don't think anybody would dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
3 decades of watching the world change.
Right. Welcome back to the Small Cap Show. Firstly, we'll speak about Genesis International. That stock has hit an upper circuit of 20% in trade. Recently, the company has closed its rights issue. Let's get in Jasmeet to understand what could have been buzzing here, but the stock is up nearly 20% odd.
Well, Samit, thank you for that. It's a very interesting company. If you look at what the company does, let's quickly start with that. The company operates as a geological data provider. Basically, it converts all the data into digital data for various structural requirements. Now, if you look at the performance of this particular counter, it's down about 28% in last 1 month, and it's similar, down about 28% over last 6 months as well. Over last 1 year, the stock has tanked nearly 65% and today it's up nearly 20%, nearly at a day's high. If you look at the investor profile, that's what caught my attention here. We have seen that the overall promoters have reduced their stake from earlier 52% to currently 31% in last 10 years. So we see a constant selling coming in from the promoter year after year. On the other hand, we also have FIIs. Even they have reduced their stakes from 7.7% to 1.5%. So as the DIIs, even they have reduced their stake from earlier 6.8 to 1.1. While on the other hand, all of the stake has been bought by the public from earlier 33% to currently 60%. Now, if you look at the Q1 performance, even that was on a slightly negative side for the company. The overall revenue did go up about 14%, but the EBITDA stayed flat, and even the margins got impacted on the back of that higher cost. The company has also recently appointed the new CEO, that's Nikhil Alukar, where he remains quite bullish on the company's journey. He calls the company to be in the inflex point. From here on, they expect the foundation has been made and they expect a growth going ahead. If you look at the key management commentary about the operations and the outlook for the future, is they state that the company is currently going through a fundamental transformation mode. Further, they also said that India is building physical and digital infrastructure, and that's where they see a lot of growth in the future for the company as well. While lastly, they also comment that there's opportunity ahead, given that company has already made the foundation clear.
Your view on Genesis International?
As of now, avoid this particular counter just because they don't chasing in the circuit breakers we have talk about for the retail investors. In the terms of margins as well as the revenue propositions, also the quality is not much favorable. Obviously, this particular sector is required exposures for the next 2 to 3 years down the line, but the fresh allocation is not advisable.
Right, thank you, Girish. Thank you for joining us and giving us your views on the stocks that we discussed in trade today. Well, with that, it's a wrap on this edition of Small Cap Bazaar. Stay tuned and keep watching NDTV Profit.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी.
When outcomes matter, you trust accuracy and precision every time. Because cricket ho ya medical care, trust is earned with consistency. Welcome to Lord's Med. Empowering health, touching lives. Accuracy that shows up when it counts the most. State-of-the-art innovation, made in India. Or trust, puri duniya ka. When it comes to medical care, choose Lord's Universe. Precision with care.
Lord's Mark Industries, हमेशा आपके साथ.
From bullet trains to Suzuki, Toyota and Sony, Japan is already deeply integrated into the India's growth story. Now, after Prime Minister Modi and Prime Minister Takaichi's summit, Commerce Minister Piyush Goyal brings 200 plus business leaders to Japan. Can the next phase of the India-Japan trade story be around semiconductors, manufacturing, investments and artificial intelligence? Join me, Rishabh Bhatnagar, as I travel with the Commerce Minister to Tokyo, Osaka and Nagoya to figure out where the next level of the India-Japan story lies.
New rules of engagement. Ambitions crossing borders. Voices refusing to wait their turn. India is chasing gears. Faster, bolder, more restless. It doesn't stop. Neither do we. NDTV, when it really matters.
Welcome to India's biggest grassroots innovation movement.
Vande Bharatam, Bharatam, Vande Bharatam.
हमें ये पूरा रोड मैप क्लियर करके ज्यादा से ज्यादा लोगों तक पहुंचाना।
स्पंदन एक पोर्टेबल ईसीजी मशीन है।
सिर्फ यहाँ पे थेरेपीज डिजाइन की गई है।
If you need any manufacturing help, do reach out and I'm more than happy to get your product to all of them.
हर हफ्ते आइडियाज के असली ग्रास रूट इनोवेटर दिखेंगे वंदे भारतम में। कमिंग सून ऑन NDTV Profit.
Some of my friends and many of my critics called me arrogant. My philosophy is very clear right from the beginning. Are we honest and transparent about what we are expected to do and what we have done? If it succeeds, nothing like it. If it doesn't, at least I have tried.
To ask you a direct question.
Yeah, please.
Has there been any attempt so far after your raids and all of that to bribe you? People have come and said,
No.
"Man lo."
Absolutely no. I don't think anybody will dare with me. Absolutely. And if somebody is thinking of that, they better think 100 times.
We are turning a page in Nepal's political economy. On the bedrock of good governance and bold reforms, we want to accelerate the pace of economic catch-up.
In rapidly changing global landscape, foreign policy must be anchored in strategic clarity and shared prosperity.
Hello, I'm Shashi Tharoor, and beyond statecraft and formal treaties lies the true heart of our partnership, our deeply rooted cultural diplomacy.
Hello and welcome back to NDTV Profit. You're watching Ask Profit, the afternoon edition of the show. My name is Puneet Zaveri, and over the next 30 minutes, we'll try and solve all your stock-related queries. So if you haven't already done so, do start sending them in on the numbers that are flashing on the top of your screen. Also call us on the numbers, that is the landline number, of course, to speak to us as well as our guests for the stock-related queries as well. But three key important points as you continue to see the markets. You have seen a very range-bound kind of a session yet again on the Nifty 50. Today, of course, we have the expiry for the monthly expiry for the futures and options as well for the month of August, and hence seeing a very range-bound move at that 24,150 odd mark. It's been depressing to say the least. Of course, a very sideward kind of momentum continuing over this month or so, but largely looking at a broader market action where you've seen. Let's look at the heat map very quickly for the Nifty 50 as well. Individual movers today that were in focus, TCS was one of them, but stocks not reacting too much on the back of that big acquisition. HCL Tech got downgraded today by UBS, stocks down 1.65%. Grasim and Cipla are the other two ones which are under pressure. You are seeing some good moves on Apollo Hospital as well as Adani Enterprises. That is the top gainer for the Nifty 50. But seeing a wave of red right now in terms of the Nifty 50 performance, that's also visible in the broader markets as well. So look at the advance decline ratio very quickly. Roughly 1100 to 1200 stocks that were advancing in the morning, and it's largely being in that similar range as well. Also, the mid cap and the small cap reflect that pressure too of what we have seen in the advance decline ratio as well. The mid cap 150 trying its best to come back into the green. The small cap 250 down by 1/3%. But in terms of the individual movers that you've seen on the BSE 500, pull those up too. You've seen some on Vodafone Idea up now about 7.3% up. Godrej Agro, RCF, and 197 Communication, that's PTM, is also doing well, up 4.9%. Hind Copper on the back of the OFS by the government is down roughly 7%. We had the Department Secretary. You're seeing some flashes on the right hand side of your screen as well that this will be the end of the OFS with Hindustan Copper. Today, though, under pressure, KRP and Data Patterns are some of the other ones that are down in trade today. Let me welcome in our guests now. We will be joined, of course, by a technical guest, but already here is Astha Jain, Senior Research Analyst at Hem Securities on the fundamental side of things. Astha, very good afternoon to you. Thanks so much for joining me today. Missed you in the morning, but the first question that from Yogesh, who's from Kunur, asking on Ather Energy. He's bought these shares at 1548, so he's bought it after a massive run-up that we've seen on Ather Energy, Astha. He's asking if it's still a good bet for the long term. What would be your opinion?
Hi, good afternoon to everyone. So, we all know that Ether design, develop, and sell electric scooters, etc. So, now what I believe that this is one of the counter where the company has a real competitive advantage because they have got a competitive advantage on the product technology wise. In fact, their brand is very good. And their charging ecosystem is also, developing fast. So these are some of the points about this company. But the major problem lies with the competition. The kind of competition we are seeing in this space, in the EV space, is making things tough for the Ather. But my idea here is since the Ather is gaining its scale day by day, definitely this is a counter which is here to stay for the long term. So maybe in the short term, we can see some sort of a reduction in the stock prices, but in the long term, it is a hold story. So remain invested in this counter, recommending hold with a price target of around 1650 at the initial levels.
1650, got that view, Astha. But the next question is coming in from Ekambara, who's from Hyderabad, and also a regular view of the show on NCC. He's been holding these shares at 193. Astha's question being, should he exit this position and buy into something like BEL or Cochin Shipyard, or continue to hold? He can hold for another year. Stock has been down. Astha, what would be your opinion?
So opinion is positive because it is one of the largest contractor, I believe, and that builds infrastructure. And the most important thing about NCC is the kind of diversification with the kind of order book this company is having. It is having an order book of around 81,200 crores. So that makes it a real, strong counter just from the revenue visibility wise. And I believe that going ahead also, this order book helps the company in giving 8 to 10% of the growth. So definitely these kind of growth are looking good for such companies. So in case if anyone is patient enough to hold for at least 3 to 6 months, then remain invested. I think the cost price of 197 should arrive.
Right, got it. Well, let's also look at Credit Access Grameen though. Now, Shashidharan, who's from Chennai, wants to know about this counter. He's holding shares at 1365. So, a little bit above what the current market price is, though down 2.5% from the day's high. He wants to know if he should still continue to hold for the next 2 years. Astha, how do you look at Credit Access Grameen? Has been in a flattish kind of trajectory over the last few quarters. What's your opinion on the stock now?
The biggest attraction of this counter is its AUM, which is around 30,000 crore. And now the management is targeting to increase it to 50,000 crore by calendar year 2028. So I think that is one of the biggest traction of this company. And I believe the kind of financial performance it is showing, because in the past few quarters, there were some issues regarding the financial performance, which the company has recovered in the latest quarter. It is the Q1 of FY27. So I think an asset quality is also improving. So yes, it is a slow mover in the short term, but I think in the long term it can give returns. So remain invested in this counter for the long term.
I just want to quickly address the flashes on the bottom of your screen as well. An important story that we are picking up. Raksha Mantri approves the transfer of technology of DRDO missiles, and this will be a big negative for players like Bharat Dynamics, but a big positive for players like BEL as well, because you have seen a lot of new private companies, especially on the missile side, come through. And if this goes through, if this has been okayed by the Raksha Mantri and the Defense Ministry as well, this will be a big one for a lot of players. I do want to address and look at Bharat Dynamics if we can pull that chart up of what that stock is doing, but it's definitely a negative for them, as this will increase the competition, could put some pressure on margins too. But part of the larger move that we are seeing on indigenization, as well as a lot of newer private players as well, who could be this positive too? Let's look at if those stocks are reacting. Let's pull up BL. Entering this domain with the private company tie-up is something that Ingrid says could be a positive for BL. The other one's Apollo Microsystems, because they did get an approval sometime back to manufacture the 12mm caliber missiles as well as ATACs. That's something that is very known for Bharat Forge as well. Also look at solar industries. Amongst the private ones, you're seeing some moves that come through on Adani Defence as well as Tata Advanced and Bharat Forge, because they already have these existing tie-ups. So all of those counters actually continue to be in focus on the back of this big update that could happen. And if the transfer of technology of the DRDO developed missiles, which has been one of the bigger regulatory bodies for India developing a lot of new technologies, if they are looking to transfer the technology to a lot of these players, then it could lead to a next leg of move for a lot of these defense names.